Yo, what's up for you guys rewatching this on the YouTube replay? Appreciate y'all being here. We're going to be looking at a lot of stocks live today, and happy Easter. Today's Easter. And look at this, the market just opened 30 minutes ago. So that's what I like about Robinhood. We get to see the overnight market. And check this out. Here are the stocks. We haven't really moved much. I mean, Google's down 0.22%. If you look at the SPY's down 0.23. Nvidia was down 1%, but now they've recovered to only down 0.5%. Yeah, Tesla's down. Amazon's up though. Palantir's up. So yeah, that's our Robinhood portfolio. Let me also check out our Webull portfolio. What's going on in here? Is anything up today? Oh wow, check that out. UiPath. This is the overnight market. UiPath is up 2%. SoFi's up 2. Disney, yo, here's a new stock I actually just purchased into. This is Disney right here. Obviously, this has been a huge underperformer. Disney is the same price as they were back in 2014. So the stock has been dead money for, decades. But look at this free cash flow per share. This is what I think is really impressive. It's $2 to $3 a quarter, and the EPS is starting to get a little better. I mean, you really want to look at operating income for Disney because this doesn't include the one-time adjustments. They just had a record operating income quarter. Anyway, that's Disney. Their politics aside, they're a lot in politics. I do like Disney just from a fundamentals point of view. And oh yeah, here's my Mumu portfolio as well. Yeah, if you guys got any stocks you want to look at, let me know. We're looking at stocks to buy for next week. I want to show you one that I'm looking to buy this week, or this week technically. It's Sunday. Happy Easter, by the way. And check this out. Here are all the stocks that we own in here. Like recent stock we've been buying up is Amazon. I think Amazon's at a pretty good valuation right now. Again, don't listen to me. This is not financial advice. You could lose a lot of money. Like look at this stock right here. We're down bad on them, but oh, thoughts on Amazon this week? What up, Jace? Yeah. Um, Honestly, I'm bullish on Amazon. It should just follow the market. Amazon's actually not too affected by tariffs because it's all the third-party seller services. Yo, what up, Angel? Is SoFi worth to keep? I think SoFi is worth to keep. But just with a little amount of shares. Oh yeah, look at Amazon, by the way. The bottom line on Amazon was $20 billion in the most recent quarter, up 88%. That's a record net income. They've never made $20 billion in one quarter before. So that was a record net income quarter. So yeah, someone asked me, hey, is SoFi one I should keep on holding? And honestly, I wouldn't have a huge chunk of your portfolio in SoFi. Like I definitely wouldn't, again, not financial advice. I wouldn't have like 5% of my portfolio in a SoFi, but I like it as like 1 to 2% because check this out. I love the growth here. Here's why I'm not selling out of SoFi. They're a fintech. Look at their financial services revenue. I mean, this is really impressive. The financial services revenue is up 85% year over year, literally to a new record. So that's some incredible financial services growth. Same with the lending business. Let's see how their lending revenue is doing. It's up 18% year over year to a new record. It grew double digits as well. So very nice growth on SoFi, and they're profitable now. No one used to take SoFi serious. If we zoom out, they used to lose 100 million a quarter. Well, now they're making like 100 million a quarter. So anyway, SoFi, I think it's worth holding on to. Again, not financial advice. With these riskier stocks, sometimes they'll pull this, they'll do this right here. Yes, I do like Amazon. What happens is, hey, yeah, if you want to get this app, it's in the link tree in bio. First link, it's called Mumu. Look at Eli Lilly. Oh yeah. Oh, we got to look at Nvidia as well. So I'll go to Eli Lilly real quick. They just made a weight loss pill. So it's Ozempic, but in a pill version. And check this out. The stock was up 14% the most recent day on that, great news. And here's what I really like about Eli Lilly. I'll be super quick about this, but look, they sell all these different prescriptions like Mounjaro, for example. Look at the growth here. The business is up 60% year over year. That's incredible. Like if you go to Zepbound, this is their weight loss. The Zepbound revenue was 175 million. Now it's 1.9 billion. I mean, incredible growth here. So, and then they have a bunch more. Like if I clicked on Taltz, how's that doing? Yeah, wow, look at that. On an all-time record. So anyway, Eli Lilly, I like them. They're a dividend growth stock. They just keep on growing their bottom line a very impressive amount. So yeah, let's look at Nvidia right here. Actually, I'll first check them out in the overnight market. Here's our portfolio. We're down 0.09%. Market hasn't moved much. But yeah, here's Nvidia right here. They're at $101 right now, basically. So I'll give you some analysis on Nvidia right here. I kind of own their competitor. I own AMD, but I'd also happily own Nvidia. Yeah, they just got their H20s restricted to shipping them to China. But look at this. They have a huge GPU market share. Nvidia has an 18% PC GPU market share. They keep on growing their automotive business. I mean, this is really impressive. Automotive business keeps on going up. And here's why Nvidia deserves all the hype. Look at their bottom line. They made 22 billion of net income just in the most recent quarter. So incredible growth of the net income. Until this net income slows down or the growth rate does, I definitely wouldn't be selling. I'd be buying Nvidia. I think next quarter, again, not financial advice, I think Nvidia is going to crush it. And Nvidia is so big, they literally own some individual companies. Nvidia owns part of ARM, they own part of APLD, and WeRide. We just saw their automotive business. Look at this pump and dump. Nvidia took a huge stake into WeRide. Stock goes to $40, and now they're at an all-time low. They're Chinese. I wouldn't own them. So yeah. Why would you own a stock and not an ETF if you're going to sell anyways? Hey, I I like to buy and hold and collect the dividends. If I go to my account right here, every stock in here, by the way, pays a dividend. This is my dividend only portfolio. So every company basically pays me cash just to hold them in the form of a dividend. And the dividend's tax free. So why not? Oh, here we go. What do you think about Lyft? Is it a good one to buy? So yeah, we know there's Uber Eats, we know there's DoorDash, and then there's Lyft as well. So let's check them out. So unfortunately, this stock is pretty close to an all-time low, but we've all heard of Lyft. I've heard of that name. Let's check out the sales growth. So wow, look at that. The sales are doing great. The sales are up 26% year over year. That's some fantastic growth. They're making, what about free cash flow? So look at that. They're making free cash flow every quarter, and the growth there is phenomenal. Wow, did they used to lose free cash flow? Yeah, look at that. They used to lose free cash flow every quarter. Now they're making free cash flow and net income as well. Look at that. They used to lose a lot of net income. At least in the most recent quarter, they made 61 million, and that was real. So anyway, they have a lot of liabilities. Honestly, I do like Lyft. Uber's also a great one. And DoorDash is pretty good. What apps? Oh, hey, this is a brokerage right here. If you want to download it, link tree in bio, first link there. Or all the apps I'm using are in the link tree in bio. They're all brokerages. Uh, Uber will always be better. Hey, I do like Uber as well. Um, let's see. Uh, Binance, that's a crypto, right? I don't know if I can look at them. I like Let me look at some stocks here. Like, oh, and here we go. Actually, let's just look at Uber. Let's compare Lyft to Uber real quick. And here's what I love about Uber. Look at their active users. Uber has 171 million monthly active users. It's up 20 million. Yo, Jada, no way. Thanks for the 11 roses. Yo, Jada, if you got a stock you want me to look at, let me know. I got you. So look at Uber's mobility revenue. It's up 25%. The delivery revenue, that's up 21%. Yeah, does Lyft do like Uber Eats? Like, do they deliver food? I don't think so. And here's the thing, crazy thing about Uber, they're printing free cash flow, 1 to 2 billion a quarter, and the net income is crazy as well. They're making net income every quarter now. So yeah, it's a super profitable company. Oh, dude, Austin said UNH stock. Dude, RIP United Health Group. Look at this stock. They are down 22% the most recent day. So that is, not great. They just reported earnings. They lowered their guidance. Can we view their earnings? So yeah, actually, they missed on all three metrics here. Unfortunately, they missed on their revenue, missed on net income, and EBITDA by a huge margin. I think they gave bad guidance. So honestly, I think this one's in buy the dip territory. Again, not financial advice. They have a nice 2% dividend yield. Huge Dow company. We use OptumRx. I use United Health Group. They have a $415 billion market cap. So I do like them. They're on my watch list. Um, Red futures, which means market opens green. Yeah, look, here's the futures right here. My portfolio is down. Hey, look at us year to date. We're down 9.6% year to date. I just like being transparent here. And yo, Janelle, thanks so much for the 2 roses, Janelle. Oh, let's look at ISRG right here. Yeah, what's up, Jada? Appreciate the roses there. So let's check out ISRG. Is this Intuitive Surgical? So yeah, this is a great growth company right here. They deserve all the hype. Like, look at this stock since 2019. They've been crushing it. Definitely outperformed the S&P. And I think, oh, no dividend. You don't get a dividend here. But look at this. Their instruments and accessories business. I mean, look at this growth. It's up 23%. They're growing their growth rate, which is so impressive. What about systems? Look at that huge bump in the most recent quarter, up 36%. Services up double digits, up 15. So every part of their business is growing. They're beating like crazy on expectations. The net incomes they're making 2 billion plus of net income a year. I love that company, yo. That looks like a great just buy and hold for the long run kind of company. Yo, Aaron said ticker symbol KR. Yeah, let's check it out. And yeah, Janelle, if you got a stock you want to look at, let me know. Here's a stock I do own, by the way. Oh yeah, this is in my Roth IRA. Again, it's only $600, but one of the 2 stocks I own in here is actually Kroger. And Kroger hit an all-time high yesterday. I'm only up 7% on them, but I love this as like a defense stock. People are still going to buy the groceries even in a recession. Kroger's kind of recession resistant, which is pretty cool. Yo, Yazzo, thanks for the coin, man. Yeah, thanks for all the gifts. If you got a stock you want to look at, I got you, Yazzo. Um, My stock, MU stock. Oh yeah, MU. So let's check out Micron. This is like an AMD kind of Nvidia competitor. What up, Sermon? Oh yeah, we could look at HIMS as well. That's a cool growth company. So here's Micron Technology first. This is an Nvidia competitor because of their compute and networking business. Look at this growth. This is so impressive. Like I would consider owning this one. It's up 108% year over year. That's incredible growth of their compute and networking business. The storage business is up 53% year over year. And look at the profits here. They're making net income every single quarter. And if we just zoom out to last year, they were actually losing money every quarter. So they've really turned things around. They're being a lot more consistent. So Micron, I do like that one. I kind of own one of their competitors. Oh yeah, here's my SoFi position. AMD. I'm down bad on AMD. I'll show you guys this. Check this out. Our AMD position at we bought them at 124, and well now it's 87 bucks. So great. Um, Let's see. Oh yeah, but what did look at hymns? Yeah, so we could look at CR. We'll look at that one too. Is that CoreWeave? So here's Hims and Hers. This is a debt-free company. So yo, Angel A- Agnio. Thanks so much, Agnio, for the heart. Thank you so much for the roses there. So here's Hims and Hers, absolutely debt-free company, literally no debt, and you can't make up the growth. This is incredible. The revenue's up 95%, literally to a new record. So business is at an all-time high, and so's the profits. Free cash flows up to a new record. Net income's at a new record. Balance sheets at a new record. You know, they just keep on growing their cash. They have 300 million of cash and no debt. So yeah, that's kind of like a financials play. Yo, happy Easter. Yeah, what up, Kadu? Hope you have a good Sunday. Yeah. Do you day trade? I don't really day trade. I mainly like to just buy and hold for the long run. Look, Janelle, I own CLSK, Soundhound AI. I think CleanSpark, this is a Bitcoin mining company. It mainly just moves with Bitcoin. So yeah, look at that. 100% of the revenue is their Bitcoin mining revenue. So this is basically a Bitcoin proxy. You mainly buy it for the balance sheet and all the Bitcoin that they own on there. And also, Janelle said she owns Soundhound AI. Yo, this is an interesting company right here, but it's a mixed bag. To be honest with you, I don't know if I'd own Soundhound AI or I'd own it, but just with a super small position, kind of like my SoFi position. I don't have much in SoFi, but here's the good news about Soundhound AI. So impressive, super impressive. Their subscription revenue went from 600,000 last year literally to 30 million. Now, hold up. To grow your revenue that much, I mean, at this growth rate, what's it going to be next quarter and the quarter before? So it's going to be incredible. Thinking of picking up some PG tomorrow. Oh yeah, Procter and Gamble. What app is this? Oh hey, Kamal. This is a brokerage right here. If you want to download it, Linktree in bio, first link there. Hey, appreciate you, Aaron. Oh yo, Fernando said Google. Yeah, we'll look at PG after this. I got you. I wish Sound would do better. Yeah, I feel you on that one. Yeah, Sound on AI. I forgot to look at the bad part. Their royalty revenues going down and their net income losses are worsening. But here's a company that I could sleep well at night having my whole portfolio in this stock. Again, not financial advice, nothing in this is. But by the way, I don't sell anything. I don't have a course book, Discord. Watch out for people impersonating me. Here's Google right here. Here's one I would love to just buy and hold, or I do own this one. I own a lot of them, but they are trading at 19 times net income. That's a super historically cheap valuation for Google. And they keep on growing their business. The net income's at a new record, 26 billion of net income in the most recent quarter. It grew 28% year over year. They own so many businesses. They own Android, they own YouTube, they have their Google Cloud. Like look at just the Google Cloud business since 2019. It's 43 billion now. They're in the cybersecurity. They have their own quantum chip. They own Waymo. So Google's one I'm happily just buying and holding forever. And check this out. If I go over here back to my Robinhood portfolio, yeah, look at us. We're down 9% year to date. Don't listen to me. But yeah, we do own Google. We own 16.24 shares of Google. We're down 7% on them. But yeah, Google's look at them year to date. This is why they're so attractive. They're at a good price. They're down 20% year to date. So anyway, um, let's. Oh yeah, CAT. So this is Caterpillar. This is a great dividend growth stock with a very low payout ratio and a very low PE. Oh yeah, I forgot to look at Procter and Gamble and Reddit as well. Yo, Yazoo. I'm looking at Reddit after this. I forgot to look at them. So here's Caterpillar. Great dividend growth stock and trading at a low valuation. Literally, they're trading at 13 times net income. They're very diversified. Look, they're in energy transportation, construction, resource, industrial, financial. They literally just make 2 to 3 billion of net income every quarter. And look at the yield. You get a 1.84% yield with only a 25% payout ratio. Very few other companies have that high of a yield and that low of a payout ratio. So super impressive in my opinion. So this company will impress you. If it doesn't, feel free to leave. This is, in my opinion, a super impressive company. So this is Reddit, but forget the name Reddit because whenever I say Reddit, everyone thinks it's a meme stock. But let's judge this one just off the fundamentals here. Look at their revenue. It's up 71% from the previous year. That's incredible growth. Seriously, that's insane growth. And look at this balance sheet. Reddit has absolutely no debt at all. No debt and $1.9 billion of cash. And I might be biased. Again, I do own this one. I wouldn't put a huge chunk of your portfolio in this stock. I have $400 in this stock. So yeah, again, that's just what impressed me and made me want to buy them. The sales are growing like crazy. And so is the bottom line. Uh, Best dividend stock right now. What up, Oscar? Yo, my personal favorite dividend stock. Oh, that's not it. It's well, this is my highest yielding one. That doesn't mean it's the best. The best one would probably be like Google or Meta, but this is my personal highest yielding dividend stock. This company actually has a 5.2% dividend yield. They've had a rough week. They're recovering though. Can you lose money doing this? Absolutely, Manuel. Yeah, this isn't financial advice. Like, look at this stock right here. Always do your own research. Don't listen to me. You could lose a lot of money, like on this stock right here. Look at this one. Yeah, stay diversified. Always do your own research. The same financial advice. Um, yeah, PG. We wanted to look at Procter and Gamble. This stock does good in a recession. So this is Procter and Gamble. You've probably heard of a lot of their brands before. They have a 2.3% yield, 63% payout ratio, very safe dividend. Such a huge company. The PE is a 27. They sell fabrics and home cares, baby products, beauty, healthcare. So they're in a lot of industries, but look at this bottom line here. They're making 3 to 5 billion of net income every quarter. So absolutely incredible. Putting all my money in Toys R Us. Yo, good luck with that, Teddy. You want to see the next Toys R Us? That would probably be KSS. This is Kohl's. Has anyone heard of Kohl's before? Like they're like a mall stock or mall store. Their stock price is lower than it was in 1997. So, this is so sad. Kohl's is going bankrupt. I mean, this is so unsustainable. A 30% dividend yield. Don't buy that. So someone said TIGR. It's the Robinhood of Asia. So up Fintech. You know what? Let's check it out. I got you. Thanks for being here. Yeah, happy Easter, guys. So $1.17 billion company. So they're not huge, but let's see. Oh, look at that. Clients, they have registered accounts. Paying clients is 1 million. Pretty cool. Interest income. So yeah, a lot of brokerages make so much in interest income. Webull does that. Robinhood does it. And commissions. Their commissions revenue is growing as well. What about bottom line? Are they profitable? They are profitable. So actually, TIGR is not bad. The sales are up 77 and they're making net income every quarter. That one I do like. Um, I just spent $200 at Kohl's yesterday. Hey, you're keeping the stock alive, brother. This one's risky. What software? Oh, hey, this is a brokerage. If you want to download it, Linktree in bio. It's the very first link there. It's free. So here's Intel right here. This one, I'd be careful with this one because if we just look at the profits right here, this is what's so scary in my opinion. Again, I just want to show you the numbers for yourself. You can draw your own conclusion. Look at this before 2020. They were making like 10 to 20 billion of net income every quarter, but look at the net income now. For the full year 2024, it was negative 19 billion. So this is one I'd be super careful of. The free cash flow is just as bad. I mean, they're losing 3 to 4 billion of free cash flow a quarter the past year. So anyway, I'm just staying away from Intel. If I wanted exposure to GPUs, I'd buy an Nvidia, an AMD, or a TSMC. I just stay away from them. Yo, TSMC, this is one of my favorite stocks right now. I'll be quick about this one. So ticker symbol TSM, this is Taiwan Semiconductor. The stock price is at a pretty fair valuation. Here's what you get with the stock. You get what did I just click? You get a 1.6% dividend yield, very safe dividend yield. This is a near $1 trillion company. You get a huge exposure to wafer chips. They make those 5 nanometer wafer chips. Their market share went from 61 to 67. They're growing their market share. The PE is a 19. Can you believe that? 19 times net income. And look at the net income they're making. 10 billion in the most recent quarter, 11 billion the quarter before, 10 billion. So TSM is one of my favorite chip stocks to buy. I don't own them. I own AMD. I should have owned TSM. Yo, M Rose, thank you so much for the rose, dude. I appreciate you, friend. Happy Easter. What about Chevron or Lockheed Martin? That's a classic Buffett stock. If we go to Warren Buffett's portfolio right here, Chevron, this is a great oil and gas company. So if you don't have any exposure to the oil and gas industry, maybe consider Chevron. They own a lot of gas stations as well. 4.7% yield. What's great about oil stocks is they have the nice yields and they're sustainable. 67% payout ratio. And look at the net income. They're making 3 to 4 billion in net income a quarter. Can you make more videos on TikTok about daily stock prices? Yeah, what's up, Gene? I appreciate you. Yeah. Actually, if you guys want to support me, I'm streaming on YouTube right now as well. I make so many YouTube videos all the time. I made one yesterday. So if y'all just want to support me, again, I don't sell anything. I don't have a course book, Discord. All I have is a YouTube channel. So YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Anyway, let's keep analyzing stocks here. Go back to Nancy Pelosi's portfolio. Yeah, dude, Nancy Pelosi's been up to some shisty stuff. She bought PayPal, Comcast, Disney. Hey, I'm a Disney shareholder as well. So anyway, let's keep. Oh, Apple stock. You know what? I would love to go over Apple. If we go to Warren Buffett and here's Nancy Pelosi's portfolio. Her largest holding is in Apple. And a lot of super investors have a lot of their money in Apple for a reason. And check this out right here. They have a PE of 31, historically fair. Look at their smartphone market share. Apple has a 23% market share. And here's why Apple's so affected by tariffs. Did y'all know this? Did you know only 36% of Apple's revenue comes from the US? I always thought it was a lot higher than that, but then 25% EU, then China. But anyway, look at this right here. The iPhone's their best-selling product, and they have their services, the AirPods, the wearables, the Mac. But look at the services business. Whenever you buy something in the App Store, Apple takes a 30% fee on that, just high margin fee. So it hurts the app developers, not so much us. But yeah, they're a cool royalty hardware software play. I can't go wrong just buying and holding Apple. I'm on an Apple iPhone. A lot of people are locked in the Apple ecosystem, so that's one to just buy and hold. Apple is also Warren Buffett's top holding, 22% up there. Yeah, hey, thanks, Gene. Yo, Gene, 20 roses. Yo, thank you so much, Gene. If you got a stock you want to look at, I got you. Yeah, but TikTok is less common. I can scroll in the daily. Yeah, you know what, Gene? I will definitely do that. I appreciate you. Um, what software? Oh, hey, yeah, if you want to get this software, it's in the link tree in bio. First link there. It's called Mumu. Good old KO. Yeah, Coca-Cola. Yeah, if you guys got any stocks you want to look at, let me know. I got you. Snap had a tough earnings report. Oh, yeah, Snapchat. Yo, what's up, David East? Yeah, I'm reading both the YouTube and TikTok chat. I'm reading both chats here. So here's Coca-Cola right here. This stock is at an all-time high. Congrats if you own Coca-Cola. I'm sure Warren Buffett's happy right now. But even at all-time highs, this stock still has a 2.7% dividend yield. So you get a really nice yield. They grow their dividend every year. They look at their bottom line. Their dividend's definitely safe. They're making 2 to 3 billion in net income every quarter. So, yeah. And look, Berkshire Hathaway, Warren Buffett is the largest shareholder. The largest shareholder of Coca-Cola is Warren Buffett and Berkshire Hathaway. So, yeah. Any clue what's the difference between COKO and Coke? So yeah, COKE, there's two different Coca-Colas. This is the Coke bottling company. This company bottles the Coke for like a lot of other countries as well. This company, I actually just met the CEO of him 2 weeks ago. He's a really cool guy. I showed him my Robinhood portfolio. I felt like such a nerd. But anyway, this is the bottling company. They're only about 12 billion when Coca-Cola, the real company's worth like 200 billion. So, yo, Nick, he said Robinhood stock. Yo, I do own this company, by the way. I do own a little bit of Robinhood, but check this out right here. This is what's so impressive about Robinhood, just the sales growth. If we look at the revenue right here, the revenue is up 115% year over year. That's incredible growth. And they're making net income now. Like, honestly, this is so impressive. If we look at, they used to lose 200 million a quarter. Well, now they're making so much net income. So that's why, in my opinion, Robinhood is a buyable stock now. And hey, I have a Robinhood portfolio. I'm a customer. Yeah, I've probably given them a lot of fee income. Look at this. We're down 9% year to date. Again, don't listen to me, but here are all the stocks that we got in here. Um, Yo, Katie, if you mess with me on Discord, I don't want to bore anyone. The CEO had made a surprise appearance, and I caught him after the show. He was giving a presentation. Yo, Katie, if you have Discord, hit me up. Can you check BAS and Nvidia? Yeah, we can look at Nvidia as well. I've never heard of this stock, so I type in BAS. I can't find that stock. So unfortunately, I apologize there. I can't find that one. So here's Nvidia right here. Yeah, I'll give you a quick analysis on Nvidia. Super popular stock right here. I would way rather buy Nvidia than Intel because look at their GPU market share. They still have a meaningful market share, 18%. So a huge market share for GPUs. Their automotive business keeps on going up. Of course, their data center business keeps on going up. But this is why I take Nvidia seriously. They're making so much net income. 22 billion of net income just in the most recent quarter, so incredible. Will Apple reduce sales in China have any impact? It could, yeah. 17% of Apple's revenue comes from China. What about Nvidia? How much of Nvidia's revenue comes from China? Wow, did y'all know this? Look at that. I did not know that. So this is why Nvidia is so affected by these tariffs. 18% of the whole business of Nvidia comes straight from Singapore. And then other China. So look, Singapore is 18%, then another 13% Hong Kong and China, and then Taiwan. So anyway, Nvidia is an internationally diverse company. What app do you use for stocks? Yeah, this is a brokerage right here. If you want to get it, link tree in bio, first link there. It's called Mumu. I also have a Robinhood one, but this one right here is my favorite for all the analysis you can do. I keep my cash in this brokerage. It earns the high yield. You don't have to pay anything, and you can track like all the super investors' portfolios and stuff, which is pretty cool. Like oh yeah, we were just looking at Nvidia. Nvidia owns part of some individual companies like APLD and WeRide. That's why their automotive revenue keeps on growing. Their partnerships with WeRide. So Nvidia is a cool, diversified company. So let's see. Oh, my bad. I forgot the F. Oh, BASF. Yo, I got you. Let's check it out. So this is a international stock. So yeah, $42 billion company. I would not buy this one just for tax complications. This is not an American company. Yeah, this is a European company. So we'll switch the revenue to USD. So yeah, they just sell commodities, chemicals, materials. But hey, what about the bottom line? Are they making net income? So ooh, yeah, I'd probably avoid this one. It looks a little choppy, like they sometimes make and then sometimes lose net income. I just don't like that inconsistency. That's probably why the stock is kind of Webull stock boomed. Yeah, Michael, check this out. What is their oh wow, yeah, ticker symbol bull right here. So look, this is Webull stock. They IPO'd, stock went from 10 to 70, but now they're back down to $26. I'd personally rather own a Robinhood, but they just IPO'd, so I can't really do any real research on them right now. They're losing money every quarter, more liabilities than assets. So I just need to wait till a little longer to see their fundamentals. Yo, M, thanks again for the rose, dude. I got you. Let's check out Verizon. This is a great high yielding dividend stock. But with these high yielding dividend stocks, they won't outperform the market. Look at this, for example. Verizon is the same price that it was back in 2018. So the stock has been flat since 2018, but you still get a 6% yield. So you've gotten 6% of your money back. They have a safe dividend or 6% of your money back every year, 64% payout ratio. So yeah, Verizon's a nice high yielding qualified dividend stock. Do you have a Roth IRA? I do have a Roth IRA. My Roth IRA is very tiny. Here's my main taxable account, and here's my my little $600 Roth IRA that I started less than a year ago. So yeah, we just have two stocks in here, Kroger and Innodata. How do you feel about quantum investing? Yo, there's only one or two quantum stocks I like. I would stay away, in my opinion. Yo, Gene, thanks again for the roses, Gene. Can you tell me a few stocks that don't cost? That might go up soon. Yo, we, you can buy fractional share. I got you. My personal favorite quantum computing stocks is Google, IBM, and for the quantum stocks, I'd stay away from like QBTS. So, what are low cost dividend stocks? I assume you mean per stock price. So all these stocks right here have like $4 or $5 stock prices. Ooh, which one would I own this stock right here. I own Perion Network, $8 a share, but this one's so risky. I mean, they lost their growth. They have the same amount of cash as NU. Honestly, here's a great company that I would happily own. Not financial advice. Nothing in this is financial advice, by the way. So check out NU right here. This is a crypto bank out of Brazil. They do have exposure to crypto, but look at this bottom line here. This is why I love them. They made 500 million of net income in the most recent quarter. They're just growing their business incredibly. Sales are up 24, net income's up 53, so that means they're expanding their net margins. Their margins are going up. So anyway, NU is one I really like. I wouldn't really trade that one. I would just buy and hold them for the long run. But oh, yo, what's up? Zero said Palantir. So yeah, dude, Palantir, great one. Thoughts on RY? Yeah, I'll check out RY after this. Oh, and it's a video game, I think. It's just not been going. Yeah, we could look at Rocket Pharmaceuticals. What's the ticker symbol? So anyway, let's get back to Palantir right here. Palantir is a debt-free company. So this company has absolutely no debt. And check this out. The government loves them. Nearly every police station uses Palantir software. The government revenue is up 41% year over year. That's incredible growth. Government revenue is up 41. Commercial revenue is up 31 as well. So, I mean, incredible growth here. And they have no debt as well. It's a debt-free company, lots of cash. So, yeah, I do like that about Palantir. Is Webull better than Robinhood? The stock? I don't think so. I think Robinhood stock is better. Um, hey, thanks so much, Gene. Happy Easter. I really appreciate all the roses there. Yeah, no, I try to get to all the questions here. If I miss anyone's stock, I really do apologize. I try to get to all the stocks here. I'm reading both the YouTube and TikTok chat. So Yeah, if y'all want to support me, by the way, I don't sell anything. I don't have a course book, WhatsApp, Telegram, Discord, none of that. All I have is a YouTube channel. I'm streaming on YouTube as well. So anyway, here's RY. This is Royal Bank of Canada. So yeah, Canadian stock, obviously. And with these bank stocks, you get a nice sustainable yield. You get a 3.37% dividend yield. The payout ratio is only at 49%, so they can easily afford that. Yeah, they're in wealth management, which is high margin. They're personal banking, capital markets, and look at the bottom line here. Wow. Oh wait, that's in Canadian, but still really impressive. They made 3.5 billion of net income just in the most recent quarter, and it's up 32%. This is my favorite, actually, Canadian bank. So RY, great yield, great stock price appreciation. I do like them. Yeah, someone said, can you check out APP? I think they're asking for Apple Oven stock, but yeah, I got you, HTS. So here's Apple Oven. Here's why they deserve all this hype. Look at their stock price. It has absolutely exploded, and they deserve it because look at this right here. Their advertising revenue. It has incredible growth. It is up 73%. You know, with this incredible growth rate, what will it be this time next quarter, this time next year? So incredible growth on ticker symbol APP. And it's not just the growth of the sales, but the bottom line. The free cash flow was up 82%. The net income was 600 million. I mean, that's so impressive. That's why they deserve all the hype. Oh, yo, Luffy, what's up, dude? Thoughts on IWM? Yo, we got to look at ASML as well. I'm sorry, I meant to look at that one. What up, Thayer? Let's look at ASML too. So here's IWM. This is the Russell 2000 ETF. To be honest with you, I would way rather own the VOO, the S&P 500. But look, their top holding is Sprouts Farmers Market. I own a lot of Sprouts Farmers Market. That's kind of funny. I didn't know that. So IWM, this is just the 2000 small cap ETFs. This is the thing. I don't know it for sure, but Apple and Microsoft used to be part of IWM, but because they're no longer small caps, they get taken out. So in the long run, that ETF should never outperform the S&P 500 because it's not market cap weighted. What app are you on? Hey, this is Mumu. If you want to get this, it's actually a brokerage. If you want to get it, it's in the link tree in bio. It's the first link there. So let me look at ASML. Yeah, we can look at HIMS as well. So this is the chip making manufacturer. They're like an Nvidia competitor. So check this out. You get a nice qualified 1% dividend. They are a European company, but look at the PE. 25 times net income. They've never traded that cheap. Never. Wow. So super low PE ratio. And here's the thing about ASML. The net income was up at 93%. They just made incredible net income in the two most recent quarters. Actually, here's what's crazy. The business is at an all-time high. The fundamentals are incredible right now, but the stock is at an all-time low. So that's what's so weird. So that's why I think this one's a not financial advice, pretty good buying opportunity. They are a European company though, so watch out for those foreign taxes. That's why I don't own them. I probably would rather buy a TSM right now. Oh yeah, RCKT. So this is Rocket Pharmaceuticals. Hey, thanks for being here, Angel. And would you buy and hold Visa? Absolutely, dude. Visa's a great one. So Rocket Pharmaceuticals, this one looks really risky. This is only a $600 million company, but and the stock's at an all-time low. Very sad. But the fundamentals are what matters most here. So let's go to revenue, and hopefully this is terrible. They don't sell anything. They don't sell a product or a service. They literally don't sell anything, and they're losing 60 million a quarter. So call me crazy. Please don't buy the stock. They won't move until they get FDA approved. That's what I'm guessing right now. They're waiting to get FDA approved because they literally don't sell anything. They have zero sales. They've never sold anything. So I like to stay away from the revenue list companies. I like to buy companies that already have a business. Like Amazon, again, not financial advice, but I've been loading up on Amazon recently. They're a great growth company. Comfort Systems, whenever I buy a stock, you can see where I hit the buy button. Look at CubeSmart. This is my favorite high-yielding dividend stock. You can kind of see I've been buying the dip on them. Again, not financial advice. Oh, let's go back to HIMS right here. I forgot to look at them. So this is a debt-free company. Sorry if I'm going really fast here. I'm having a great time. Appreciate y'all being here. Happy Sunday or happy Easter. So here's Hims and Hers right here. Absolutely debt-free company. Literally no debt. And look at the growth. This is nuts. The revenue's up 95%, literally to a new record. They deserve all the hype that they have. They're kind of like a meme. They're a meme stock to a lot of people, but this company is no meme. The fundamentals are incredible. Assets are growing. Cash balance is growing. Net income's profitability is at a record. So yeah, unfortunately, the reason the stock is down so much because they can no longer sell their high margin weight loss prescription. Bought the dip on Micron, gonna hope for the best. I wanted to look at Visa for you. My fault. So if we go to Nancy Pelosi's portfolio, this is a Nancy Pelosi approved message right here. She owns a lot of Visa. So this is the payment processor. They have a shared oligopoly on the payment processors. It's like Visa, MasterCard. Those are the only two. And look at the net income. It's incredible. They're making literally 5 billion of net income a quarter, 20 billion plus a year. You know, those small microtransaction fees that are slowly bankrupting us are making Visa rich. And they have a nice dividend growth. So yeah, Visa's cool. What brokerage is this? Hey, brokerage is in the link tree in bio. First link there. It's called Mumu. And yeah, you can track like all the super investors' portfolio and stuff. So, oh yo, here's a stock I would absolutely stay away from. Oh wait, hold on. I saw um another I missed in your account. Yo, what up, T? I appreciate you, T. Yo, I'm gonna give you a follow, bro. Appreciate you being here. So here's Sava. Please stay away from this company. If you're wondering what happened right here, the CEO or the CFO went to jail. One of the again, I could be wrong here, but I'm pretty sure the CEO or the CFO literally went to jail for fraud. They don't sell anything right now. They've never sold a product, and this is from 2013. They were getting FDA approved and they got FDA rejected. Their results were a complete fail, and now they're a revenue-less company. The only thing that's good for this company is their cash on hand. But please don't buy them. Again, not financial advice. I'd just stay away from that company. They can't sell anything. Yo, what up, Poe? TSLA. Is this options? This is not options. We're just looking at stock price. You know, I like buying and holding shares. I don't have any options open right now. I just like buying and holding great stocks for the long run. I like dividend stocks as well. Yo, what up, Terry? Is now a good time to buy Reddit? Yeah, dude, I think so. We'll look at Reddit as well after this. So here's Tesla, dude. Sadly, Tesla lost their growth, unfortunately. We can see their total vehicles delivered. It's actually down 13% year over year. Very unfortunate. Well, if we just look at their automotive business, this is what's unfortunate. They have a high PE ratio, but the business isn't growing anymore. The automotive business on Tesla is down 5% year over year. But there is some good news. Check this out. Look at their energy generation business. This is like a hidden gem about Tesla no one talks about. It's at a new record. It's over 10 billion in revenue for them. I mean, it's still only 10% of their revenue, but I like that it's growing. And look at that. This is why Tesla's so affected by like China. Look at that. 21% of their revenue comes from China. And yeah, I want to see the growth come back to Tesla. You know, they make the robots and stuff. What app? Oh yeah, if you want to get this app of software, it's in the link tree in bio, very first link there. Oh, I wanted to look at Reddit as well. Yo, Reddit is a debt-free company. I do own this one, by the way. I'll show you my position after I analyze them, but forget the name Reddit. You know, just forget that the name of this is Reddit. The revenue is up 71%. They have such impressive growth. So sales are up 71%, and they have no debt at all. Reddit is a debt-free company with 1.84 billion of cash. That's what's so impressive. 1.84 billion of cash, no debt, making free cash flow, making net income now, 71 million in net income, 90 million of free cash flow. So they're just a profitable company. They should make like 400 million a year of net income. So, do you own any covered call stocks? Are too risky? No, covered call stocks are not risky. They just won't outperform the market. Um, I, those are a great high yielding dividend play. You know, I actually like covered call ETFs more than a lot of high yielding individual stocks. So anyway, here's CoreWeave right here. We've all probably heard of this IPO right here. They were huge. Only 10% of this company is available to trade. So like you see, the whole company's worth 18 billion. Only 1.8 billion dollars of shares are available to trade. The rest are held private. So in the most recent quarter, the sales were 740 million. There's incredible sales, but there's no history right now for me to look at the fundamentals. So I'm just holding off on that one. What is MTD? Someone said MTD stocks. So I've not heard of this one. Metaller to Toledo International. So $21 billion company. I've not heard of them before. What industry are they in? Well, let's find out. So laboratory. I'm not, I don't know what that is, but let's see. Laboratory revenue. Hey, it's up 17%. What about the industrial? Industrial retail's down. So it's like a mixed bag here. I think they just sell commodities like sales were up 11, net income was up 36, so they did grow their margin. That's really good. They have more liabilities than assets, which isn't great, but they did grow their net margin, which was really impressive. But yeah, nothing's really blowing me away here to really want to own this stock. I'd be careful with that one. High yielding dividend stocks you recommend? Hey, I don't recommend anything, you know, not financial advice, but this is my personal highest yielding stock. Ticker symbol Cube right here, Cube Smart. They have a 5.2% dividend yield. Also, if I go to my Robinhood portfolio, I love dividend stocks, by the way. Every stock that I own in here pays a dividend. So all of these stocks are dividend paying stocks. And oh no, looks like we're falling in the overnight market. Dang, look at the QQQ right now. We're at a new intraday low. So the market's probably going to be red tomorrow. Probably, but hey, it just another good buy the dip opportunity for those with some cash on hand, you know. Hey, I got a little bit of cash. I got $760 ready to buy the dip. Thank you for taking your time to go over stocks. Yay, thanks. Appreciate you, Angel, being here. Yeah, hey, I'm streaming on YouTube and TikTok right now. If y'all want to support me, head over to the YouTube stream. I read that chat first. And, my TikTok account I'm on right now has been permanently banned. Can you believe this? Over 8 times. My account has been permanently banned over 8 times, and it's been unbanned 8 times. The TikTok banning system is so messed up, and I'm scared it's just going to get permanently banned. So if that happens, I do stream on YouTube every day as well. I'm dual streaming. Anyway, let's get back to Uber here. Sorry for the rant there. Uber stock is a great one, I think, to just buy and hold. Look at their active users, 171 million monthly active users. They're diversified mobility, delivery, which is like Uber Eats. But look at the free cash flow here. It's nuts. They're making 1 to 2 billion of free cash flow every single quarter. And same with the bottom line. They're making net income every quarter now. So Uber's one I think is a great buy and hold. How'd you learn to invest? Hey, I just started investing when I was 18. I've read a lot of books. Again, I'm not an expert, not financial advice. Like, look, I've lost a lot of money on a stock, but yeah, I've just been interested. I do covered calls weekly. Kings perform well. Hey, that's great, Andrea. Yeah, sell the calls yourself. That way you can avoid the huge expense ratios some of these covered call ETFs have. That is awesome. Um, Yo, what up? Carbon said, can you analyze hymns? Yeah, we've looked at them a couple times, but I got you. Thanks for showing up to the YouTube stream, Carbon. So this is Hims and Hers right here. They're a debt-free company. They literally have no debt at all. And here's what impressed me the most is the sales growth. So the sales are up 95%. As long as they can keep up that sales growth, that's incredible growth. And same with the profits. Free cash flow every quarter. The net income's at a record as well. Assets are at a record with no debt. So Hims is, in my opinion, a great buy and hold for the long run kind of company. That's a debt-free company. I actually have a watch list of all the stocks I found with no debt. So every stock in here has no debt. You've probably heard of Pinterest. Yelp has no debt. Has anyone heard of the Opera GX browser? I swear, I keep getting so many ads for that freaking browser, but they're publicly traded. Did you know that? OPRA. I want to hopefully give you some stocks you can add to your watch list. Again, not financial advice here, but hopefully you can find a few cool stocks you could add to your watch list. Look at Duolingo right here. Whoa, this company is super impressive in my opinion, and you won't believe this. If this doesn't impress you, feel free to leave. Look at their subscription revenue. I love subscription model companies. Look at this growth. I mean, you can't make this up. It's up 48%. It's up 40% every quarter. That is incredible subscription growth. So, and that's all high margin for them. If we go to the free cash flow is up 80%. They're making net income every quarter is up 15%, and they're debt free. So anyway, let's get back to yeah, you love Opera GX, yeah, dude. Yo, what up, Alan, what's up, dude? HUMA. What's this one right here? HUMA. So this is Humasite, or I'm probably pronouncing that wrong, but dang, unfortunately, this stock is at an all-time low. I feel bad if you own them. Yeah, this whole company is worth $200 million. So in my opinion, I'd stay away. And yikes, look at that. They have no sales right now. They're expected to make 400,000 next quarter, but yeah, for right now, they've literally never sold a product or a service, so they have no revenue. So yeah, in my opinion, that's a startup. That one looks really risky in my opinion now. And that could be a fun swing trade. I wouldn't put a lot of my portfolio in that kind of stock. Yo, Angel said BAC, Bank of America. Yo, if you're looking for a bank stock, Bank of America is a huge one. And Warren Buffett owns a lot of Bank of America. If we go to BAC right here, yeah, 10% of Warren Buffett's portfolio is in Bank of America. So you're kind of backed by Warren here. And check this out. Huge, insane. 2.73% yield and only a 31% payout ratio. So they have a very nice dividend growth rate. Um, hey, Jacob, I like the Stocks and Psychology of Money. That's a cool book. Um, let's see. Yeah, I should have a Amazon affiliate link to my favorite books, but no, I don't do any of that. I don't sell anything, by the way. I don't have a book. I don't have a course. I don't have a Discord, WhatsApp, Telegram. I don't got none of that. I'm just on here to give my opinion. Uh, so let's keep going. Yo, Sam said Pfizer, PFE, right? Yeah, Pfizer. This is the company that owns Viagra and a lot of other kind of companies, like prescriptions like that. So they're a huge company, $125 billion company. But unfortunately, the stock is at an all-time low. They really benefited from the pandemic, made a lot from the vaccines and stuff. But right now, unfortunately, the numbers are a little choppy. Like they were sometimes losing money. As long as they're not losing net income anymore, I think this one's decent, but nothing's really blowing me away on Pfizer to really want to own them. You get a great yield here, a 7.6% yield. The payout ratio is over 100% now. That's because I think they had some one-time adjustments to their net income, making it go negative. But yeah, it's an okay stock. It's an alright stock. Should I try to beat the market with Apple? Yo, I, I I wouldn't have the intention to beat the market. owning it. You want that intention, obviously, but this is just a great company to buy and hold for the long run. I would just buy and hold Apple. Don't trade them. I just buy and hold them forever, I think. Not financial advice. Huge smartphone market share, crazy. Most of the revenue comes from their iPhone. I'll be buying an iPhone when I'm wording this weird. When my phone breaks, the next phone I'm getting is an iPhone. And a lot of the revenue comes from services, the wearables, the iPad, AirPods. A lot of people are locked in the Apple ecosystem. Like, look at the services revenue; it's up 13% year over year to a new record. That's the high margin service fee whenever you buy something in the App Store. They take 30%. And look at the net income; they made 36 billion of net income just in the most recent quarter. They are affected from tariffs. Did you know just 36% of Apple's business comes from the US? Then they're in EU, China, 17% comes from China. So, um, yeah. Let's see. I'm European. Yeah, yo, third, we went over ASML earlier. Yo, if you missed anything, you can watch it on a YouTube replay. Remind me to look at ASML in a little bit. I'll look at them. I looked at them just not too long ago. Here's Intuit. Yo, anyone heard of TurboTax or Intuit? They own TurboTax, right? This is like the tax company. And the stock's been flat for a year. This is what's so weird. The stock has been flat for a year. So if you've been looking to buy into them, now might be a good time. This is a great dividend growth company. 0.7% yield, 35% payout ratio. So, they own Credit Karma. What is ProTax? Not sure what that is, but yeah, they own Global Business Solutions. So anyway, wow, look at the growth there. It's up double digits, 19%. What about the net income? Yeah, they usually make all their revenue in Q3. So next quarter is going to be huge for them. But yeah, Intuit, great buy and hold for the long run company. Very safe. Uh, Yo, what's going on with APH right here? Yeah, that's Amphenol Group. Yo, this company right here, this is a stock you've probably never heard of before, but I love this company. They make this is they make under they make huge underwater sea cables for harsh environment solutions. It's so niche. They're also in the aerospace business, so like that's their communications business. Look at their harsh environment solutions business. I've made a lot of YouTube videos about this company. I've go over their investor presentation and stuff, but look at the growth. This is what impressed me. The revenue's up 39% on the harsh environment. The communications is up 43. Wow, 43% growth. I mean, that's nuts. So sales were up 29, net income was up 44. That means they're growing their net margin. It's up 12%. So anyway, they've acquired over 50 companies in the past 20 years. So they're an M&A company. They return most of their money. This was really interesting. A lot of stocks return money to the shareholder in a dividend, but this company returns money to the shareholder by buying new companies through strategic and synergistic M&A. We got that out. There we go. Anyway, why is everyone always scared to invest when we're at COVID lows? It's just when you're in the moment, it's tough to buy. Yeah, I've experienced it before, but yeah, sometimes it's hard to buy when there's great deals. It's kind of like a weird psychology. Um, yeah, here's my portfolio, by the way. This is the overnight market. Stocks are open right now. We're down 0.33% right now in the overnight market. Look at the Qs. So unfortunately, expect some red tomorrow, most likely. The Qs are down 0.6% right now. What about Bitcoin? How's BTC doing? Whoa. Hey, look at that. That's what's so unique. Stocks may be down, but Bitcoin's up. So hey. Anyway, let's keep looking at some stocks. Yeah, if you guys got any stocks you want to look at, let me know. We can check them out here. Hey, I appreciate you, Jacob. I love red. I want to keep buying. Hey, I agree with that. Yo, oh yeah, Jack, I forgot to look at this one. He said, "Can I get a second opinion on Marvel Technology?" So this company is a mixed bag here. So I'll show you the good news. Here's the good news about the company. Look at the net income. For the first time ever, they actually made net income, 200 million of net income, and that was real. That was real net income. If we zoom out, they used to just lose money every quarter. So as long as they can keep up that net income positivity, I like Marvel. What about the sales? Sales were up 27. Hey, not bad. They're a pretty decent stock. I like TSM right now. I like MU as well. So here's SURG. Yo, what up? Sean said SURG. I've not heard of this company yet. Super small stock. Yo, this one's super risky. This whole company is worth $50 million. So think about that. This whole company is worth $50 million. So a little bit small of a market cap, but that's why I'd stay away from them. But they're in mobile virtual network. I'm not sure what that is. So yeah, look at the revenue. This is terrible. Revenue's down 70%. That's so unfortunate. Yeah, I'd stay away from this stock. And they're losing. Yo, they used to make net income every quarter. Now they're losing net income. Yeah, please stay away from SURG. That looks so risky. Um, Let's see. Yo, Kevin said CVX. Is that Chevron? You know what? Warren Buffett is a huge shareholder of Chevron. So, yeah, that's an oil and gas stock. If you're looking for some exposure to the oil and gas industry, I think Chevron is a great pick because I love dividend stocks because of the dividends. These oil stocks usually have really high dividends. So, you get a 4.7% dividend yield. And I think it's really safe. 67% payout ratio, very safe. And they're literally making 3 to 5 billion of net income every quarter. So, they're just really profitable. But they probably won't outperform the market with an oil and gas stock. But you get the nice yield. Are you mostly invested or do you hold cash? Yeah, I'm mostly invested. I'm 90% invested right now. I don't have too much cash left over. But ooh, here we go. Yo, Owl said SoFi stock. Yo, I do own some SoFi as well. This is a great fintech right here. And here's why I like SoFi so much. If we go to this right here, they're in the lending business. This isn't even the best part. The lending revenue is up 18%, like great, but look at the financial services business growth. I mean, this is so impressive. It's at a new record, up a 90% year over year. So incredible growth on their fintech business. And look at the bottom line here. SoFi used to lose 100 million of net income a quarter. No one could take them serious. But now SoFi is making net income every quarter. So people are starting to really take them serious. And I do own a little bit. How does GitLab look? Yo, Slim Jimmy. Slim Jimmy, isn't that the other guy of like Ray Shrimmer or whatever? His name was Slim Jimmy. Uh Anyway, let's get back to GitLab right here. I don't know what I'm talking about. Anyway, here's why I like GitLab so much, the sales growth here. So if we look at this right here, the revenue was up 29% year over year. So incredible growth here on the sales, up 29%. But look at the net income. They're now net income positive as well. We zoom out, they used to lose a lot of net income every quarter. Now they're making net income for the past 3 quarters. I do like that, as long as they can keep that up. I feel like next week will be fine. Our stocks data kicks in. Yeah, New York will probably just be a flat week, or we won't move too much. I agree with that. We might be red tomorrow, but it shouldn't be too big of a deal. Yo, Rivera said SMHB. What is this one? SMHB. This looks weird. Uh, London monthly paying 2x leverage small cap dividend ETF. Dang, look at their assets under management. Their assets under management just keep falling. Only 21 million of assets under management. A 29% dividend yield, and it keeps on going down. So that doesn't seem too sustainable. I'd be super, to be honest with you, man, I just stay away from that one. Yeah, that looks so risky. Uh, let's see. What about Big Bear AI? So yeah, this stock right here is a mixed bag. To be honest with you, I'll just show you the numbers for yourself. You can draw your own conclusion. This whole company, remember this, the whole company is worth $730 million. So the whole company's worth 730 million, and just in the most recent quarter, they lost 150 million. So that's just the unfortunate part, that they're losing a lot of money right now. They literally lost 20% of the whole company just in the past year. So that's why I'd stay away from Big Bear AI. It's just because of those net income losses. They really scare me. What website are you using to track this? Oh yeah, if you go to the link tree in my bio, it's the very first link there. It's a brokerage. Uh, it's oh, UKW. Wait, here we go. UKW. What's this one? Yo, sir, I can't find that one. I typed that one in. Unfortunately, I cannot find that ticker symbol for you. So let's see here. Aurora. What is Aurora? Yo, Josh said FWRD. What's this one? FWRD. So Forward Air. So yeah, another really small company. I'd just be careful with these small cap stocks. Yeah, it's at an all-time low. They're only worth 400 million. So is cash flow the same as net profit? No. So there's free cash flow. It doesn't include non-cash items like stock-based comp. Stock-based comp is included in the net income. The net income is what you really, really want to look at. Yeah, look at this on forward though. That doesn't look great. They lost a lot, $1 billion at one quarter, 35 million in the most recent quarter. So nothing's blowing me away here to want to buy that stock. They look so risky. Yo, what up, 1-5? How's it going, man? Yeah, happy Easter, guys. Hope you're having a good Sunday. Oh, yo, this is Vici Properties. Yeah, what up, Sam? I love this stock right here. Look, they're at an all-time high right now. If you've heard of like the Las Vegas Sphere, that Black Pyramid in Las Vegas, they own a lot of MGM resorts. They own the land under all that. So a ton of properties on the strip that they own. And the best part is, since this is a real estate company, they do triple net leases. You get a 5.2% dividend, and it's completely sustainable because they're a real estate investment trust. So, literally, by law, they have to pay out most of their income in the form of dividends to avoid taxes. So, they have to pay out that income by law. So, that a normally high dividend yield, like most people like 6% dividend, that can be sustainable. Well, it is because they're a real estate investment trust. But at the same time, you also have to pay higher tax on that income because it's a non qualified dividend. So you have to pay like 12% tax on it at minimum. Anyway, let's keep, or unless it's in a Roth IRA. That's why those companies are great to hold in a Roth IRA. Um, let's get, AUR. So let's check it out. AUR. So this is Aurora Innovation. So $10 billion company. That's a pretty good market cap. $10 billion company. Let's see here. So, yikes, they're losing a lot of money. No, no, yeah. I there could be something good here. Like there could be like a contract that has some value for them right now, but right now, like they're losing 200 million a quarter. They have a great balance sheet. They have no debt, lots of assets, but I don't, they're losing a lot of money and they have no sales. They don't sell anything right now. They literally don't sell a product or a service. So it's weird. It's an interesting one. Yo, Godric said GLD, please. Yo, that's literally the gold ETF. So if you're looking at the actual commodity of gold, or this is the commodity of gold publicly traded in an ETF right here. So gold is literally at an all-time high right now. So yeah, congrats if you own any gold. If you got any chains, gold jewelry, maybe go hit up the pawn shop. But yeah, if I was going to invest in gold, I wouldn't buy physical gold. I not financial advice. I'd rather buy the physical ETF right here because you can instantly sell it and take the profits when you want. You know, you don't have to go to a pawn shop and pay the spot price 1% fee. You know, there's lower fees with the ETF anyway than owning physical gold. You don't have to lose it. So I mean, anyway, let's keep going here. How about Ford? Yo, I want to look at Google as well. What up, Gene? Yeah, we'll look at Google after this. Okay, I want to invest in a company that can make money if you much. I was thinking Apple. Yeah, Apple and Google, those are great. I own Google. I'd happily own both of those. Let me go over Ford and we'll look at WFC as well. So Ford, unfortunately, their stock price is lower than it was in 2001. So if you bought the stock in 2001, the stock price is lower, unfortunately. But what you do get with Ford is this incredible yield. You get an 8% dividend yield with Ford, and it is sustainable. Or no, this says a 53% payout ratio. It's sustainable for now. I'd be careful with them with the tariffs. You know, what app is this? Oh, hey, if you want to get this app, it's in the link tree in bio. First link there, it's free. GTO. Actually, I wanted to look at Google right here. Let me go back to my Robinhood portfolio right here. Again, I do own Google, so I might be biased, but check this out right here. Google is down 21% year to date, and I am personally down 7% on my share. So I am not up on my position right now. So again, I might be biased because I own them, but check this out. With Google, you get a very cheap valuation. They're trading at 19 times net income, so very low valuation. They own Android, they own YouTube, Google Cloud, Wiz, Waymo, Quantum Chips. So super innovative company. And look at the bottom line. They made 26 billion of net income just in the most recent quarter. So revenue's up 11, net income's up 28. That means they're expanding their net margin. Why Google over GOGL? Yeah, there's no difference. I mean, it's just the voting rights. I'm never going to vote with my shares. So I just bought GOOG. It doesn't matter which one you buy. I'd also own GOOGL. Ooh, yo, what up, Trapper? Double away. Good to see you, homie. Yeah, dude, United Health Group. This is unfortunate right here. So UNH, yeah, there's no difference in the Class A and Class C Google shares. It's just the voting rights. I'm never going to vote with my shares, so I just buy GOOG. So here's United Health Group. One won't perform better than the other. So United Health Group, they just reported earnings. Unfortunately, they missed on every metric. They missed on sales, they missed on net income, they missed on guidance. It was a terrible quarter for them, and the stock reacted appropriately. Which and what's nice is you get a really nice dividend yield. You get a 1.8% yield. Oh, that's my phone. Sorry. My phone's getting low here. We gotta hustle. Appreciate y'all being here. Yo, we go live every day, twice a day. If y'all want to hit the follow button. I don't sell anything either. I don't have a course, book, Discord, none of that. So 52% payout ratio. We use UNH, by the way. We use OptumRx. You know, how's that doing? Whoa, dude, look at the growth here. What? That's crazy. You know, that's why UNH, you know, is a $400 billion company. So anyway, that one I think is in buy the dip opportunity. What's your advice for starting investing? Yeah, I would stay away from all the risky kind of companies. If I was just first started getting investing, again, not financial advice, I would put the majority of my money in VOO, which is just the S&P 500. and it diversifies your money up into the top 500 companies. Literally Apple, Microsoft, Nvidia, Amazon, Meta. I would happily own all these companies individually, and I do own a lot of these individually. So, yeah, I'd put majority in the S&P 500. Then I maybe play around with some individual high quality companies like an Amazon. Yeah, I got Amazon right here. We've been loaded the boat on them. We're down 7%, but I'm looking to buy more Amazon. Yeah, Google Max buy, I like them too. Sorry, I missed a website. Yeah, if you go to the link tree in my bio, the first link there, Professor, it's a brokerage. It's called Mumu. So let's see. Google Max buy, yeah, dude. That one I could happily make them like 10 to 20% of the portfolio. Yo, what up? Zelda said hello. I'm a young man from China. Well, how's it going, Zelda? Good to see you, friend. Thanks for showing up. So here's Palantir right here. I don't know, hopefully you can understand me. You speak English? That's really cool. Anyway, here's Palantir right here. This company impresses me every time I look at them. The government revenue right here is so incredible. Nearly every police station uses Palantir software. It's up 41% year over year. So the government revenue from Palantir is incredible. And same with the commercial business. I like just showing you the numbers so you can kind of understand what they do. They make net income every quarter. And of course, they have no debt. How much cash with no debt? 5.23 billion of cash. That's just nuts. So, um, oh yeah, I forgot to look at WFC. If you're still here, Angel, what's up, yo? This is Wells Fargo. We've all heard of Wells Fargo before. They're just a bank. So yeah, you get a 2.4% dividend yield with Wells Fargo, not too shabby. And they're diversified. Consumer banking, corporate, wealth and investment management. So that's cool. And look at that, they're making literally 4 to 5 billion of net income every single quarter. So very profitable company. Can't go wrong just holding them. I have a limit order on 95 for Nvidia. Do you think it'll hit? Ooh, I don't know. That'll hit tomorrow, but definitely could be one day. You know, I'll, Nvidia is a great one to just buy and hold for the long run. I wouldn't sell them right now. Yeah, there is some tariff news. Like, here's why Nvidia is so affected. Like, look at this. 18 plus 13, so 30% of their business just comes from China. So that's why they're so heavily affected by tariffs. But Nvidia is so great for right now. The revenue is great right now. The net income is 22 billion in the most recent quarter at a new record. So incredible bottom line revenue or net income right here. So that's why I wouldn't sell out of Nvidia. I just hold them. So, yo, what's up? Thayer said rain metal. Yo, what's the ticker symbol for R? I'll type it in because I appreciate you. RHEIN. Here it is. I think this is it right here. It must be because, wow, this company's at an all time high. Now, they are a company that's outside the US. So, yeah, this is a European company. So, I don't like that. So, they sell vehicle systems, weapon and ammunition. Oh, so they're like an aerospace and defense company, electronic solutions. So, wow, they're a very diversified company. They made 500 million of net income in the most recent quarter. So actually, I can see why this stock's at an all-time high. I don't know if I'd buy them right here. It's kind of tough to buy this one right now after the huge rally. But congrats if you own them. That nice. Oh, what up, Angel? Good to see you. Oh, here's a cool company, TTWO. This is Take Two. Yo, what up, Jack1008? So this is Take Two. This is the company that owns Rockstar Games. So if you've heard of GTA 5, GTA 6 is about to come out. It's supposed to be a big winner for them. Yeah, the stock's at an all-time high right now. They own like Red Dead Redemption, all the Rockstar games. But yeah, Take Two, the revenue's really bad right now. The sales are down 0.5% year over year. But the reason the stock's doing so good is because GTA 6 is about to come out. It's supposed to be a huge winner, huge revenue driver for them. Do you talk about cryptocurrency like XLM and XRP? We don't really look at crypto here, but because there's nothing for me to really look at. Like we can look at the stock price, but there's no fundamentals. Like we can't look at their financials. But that's also a feature. Like there's no earnings report with XRP. There's no earnings report with Bitcoin. That's what's so cool. It's like a unique feature of crypto that I always thought is really cool. Let's see. Show opinion on Fastenal. What is that stock? You got a ticker symbol for me? I got you. We'll check it out. Yo, Casey said RTX. Yo, what up, dude? This is Raytheon, or this is like a huge aerospace and defense company. So if we go into a war, which we kind of are, this stock will do really good. So I'll show you a little bit more. This has a nice yield as well. Wow. So you get a 2% dividend yield with RTX, and look at where the revenue comes from. Collins Aerospace, Raytheon, like I said, Pratt and Whitney. So very impressive company in my opinion. Sales are up 8%. Net income, they had a one-time adjustment there. They usually make a billion plus of net income a quarter. So yeah, RTX, great aerospace company in my opinion. Um, Nvidia is showing so much resistance at 100. Yeah, dude, John, you're right. At the psychological $100 a share, there's probably a lot of resistance there. You gotta give it. Hey, what up, JS? I appreciate you, homie. Yeah, yeah. I'm reading both the YouTube and the TikTok live stream. Yeah, if y'all want to support me, head over to the YouTube stream. If you missed anything, you can replay it. Oh, here's a super impressive company, yo. This is Broadcom right here. What up, dude? So a lot of people know Broadcom for their semiconductor solutions, but look at this hidden gem right here. Look at their infrastructure software business. This is so impressive. It literally last year was 2 billion of revenue. Now it's 6.7 billion. Just incredible growth. And then also their bottom line. Look at the free cash flow. Free cash flow was 6 billion in the most recent quarter. The net income was 5.5 billion. So they had a one-time adjustment that one quarter, but the business is at an all-time high record, and you get a nice dividend. I forgot to look at that. They have a great dividend yield. Yo, Jafar said opinions on LIT. Let's check out LIT. Is that a? Let me know if this what is. Are you talking about the Global X Lithium Battery ETF? So yeah, look at this. The Lithium Battery Tech ETF. What are the top holdings? I'm curious. It's BYD. I really like BYD. Albemarle, Tesla. So a lot of these stocks I haven't heard of before, but unfortunately the ETF hasn't done too good. Man, I hope, yo, Jafar, I hope that was what you're talking about. I apologize. Yo, Lucky said Sirius XM. So, hopefully my phone didn't. Yeah, there we go. So, yeah, news. Hey, if you want to get this brokerage, is in the link tree in my bio. It's the very first link there. So here's Sirius XM. So the stock is at an all-time low right now, which is unfortunate. Well, not all-time low. Whoa, the stock was booming in the year 2000. But anyway, yeah, the stock's not done too good. You get a 5.2% dividend yield with this company. Let's see. They own SiriusXM and Pandora. So maybe Pandora's Box. I think that's what they own. I don't know. So yeah, they had this huge net income loss. They lost 3 billion of net income, but it was a one-time adjustment. If you look at their operating profit, this is what you really want to look at. They're usually making 4 to 500 million a quarter. So the dividend is fairly safe. I would have to do some more research. But again, nothing's blowing me away here. The cable business, their business isn't going to grow much. You won't outperform the market owning that stock. Are you using the TikTok studio? I am. No, I'm using OBS for YouTube. Yeah, I'm streaming on YouTube and TikTok right now. Ooh, so Tempest AI. This is a stock that Nancy Pelosi's husband bought. What? Yeah, this is a brokerage right here. News. If you want to get this brokerage, it's in the link tree in bio. First link. That's called Mumu. But here's Tempest AI. Nancy Pelosi's husband just bought this stock. So that's what was kind of cool. This is a niche company. Look at this. They're in the genomics business, and look at how this is growing. The genomics revenue is up 31% year over year. So the business is at an all-time high. And also look at the data and services. Data and services are up 45% to a new record as well. So incredible. Yo, what up, DG? I forgot to say hi to you. What's up, DG? And also, what up, Not Fates? He said, can you check out Oracle? Yeah, dude. So this is a huge cloud play. You've probably heard of the Oracle cloud business. Um, they're like an AWS competitor. Here's what's so crazy about them. Even at the stock price right now, you get a nice yield. You get a 1.24% dividend yield, which is really nice. The PE ratio is a 30. It's pretty fair. Yeah, look at it. 85% of their business comes from their cloud and licensing business. And it's up 8% year over year. That's still pretty good growth. For revenue at $10 billion, went from 10 billion to 12, not bad. 8% growth. And what about net income? Yeah, look at that. Wow. They're making 2 to 3 billion of net income every single quarter. What about net margin? They have 20% net margins. It grew 19%. So hey, not bad. Um, what do you think about us going into recession? Is something we should worry about? Yeah, I think it's something you should worry about. But if you have the right stocks, I wouldn't be worried about it. Like McDonald's right here. McDonald's does great in a recession. A lot of my stocks are kind of recession resistant, not recession proof. Like Google is another like kind of recession resistant stock. In Kroger, people still got to get their groceries. I got 5 shares of Kroger. So yeah, those are some of my more favorite recession resistant stocks. Yeah. Do you think Oracle will pass all-time high soon? Probably not soon, but probably one day. I'm new to stocks. Do I invest in a lot of companies that are low right now? No, I would just buy quality. Like I would buy the top S&P 500 companies. Like I'd buy Amazon. Again, not financial advice. I'd buy Google, Amazon, Meta is a great valuation right now. I own some Meta as well. If I go back to here to my oops, here we go. So if I go to, yeah, I got 4 shares of Meta right here. I got Salesforce. If anyone heard of Slack before, I got Salesforce. So yeah. Anyway, let's keep looking here. This one looks weird. GWAV. I've not heard of this stock before, but let's check it out. Green Wave Technology Solutions. Yeah, please stay away from this company. The whole company, y'all aren't going to believe this. The whole company is worth $9 million. This is so risky. This is a complete, like, can't say that word. Oops. Um, yeah, they have no revenue. Was that a one-time adjustment? It was. That was a one-time adjustment. They've never made any net income. They're not a profitable company. They don't sell anything. There's no data on the revenue. So please stay away from that stock. Looks like, yeah, King, I'd stay away from that one. Looks super, super risky. How about NU? Yeah, NU Holdings. This is a crypto bank out of Brazil and in South America. You know, South America is where crypto is super popular because the currency sucks down there. So this bank is in a great spot. Warren Buffett owns some of this stock right here with Berkshire Hathaway. So Berkshire Hathaway owns some of NU, and you won't believe this. Look at the bottom line. Um, in the most recent quarter, it was 500 million in the most recent quarter, up 53% year over year. So incredible net income growth. Yo, Rabbit said, bro, you got banned last week. Absolutely right. Yo, if you guys want to, I'll be super quick about this. My TikTok account that I'm on right now this account has been permanently banned over 8 times. To where if you look at my account, it doesn't even exist. But my TikTok account has also been unbanned 8 times. The system is so flawed, and I'm scared my account is going to get permanently banned. So if you guys want to support me, I'm also streaming on YouTube as well. I'll never stop streaming on there every day. So if you want to help me out, go to my YouTube channel. It's called Nathan Roberts. Also in the link tree in bio. I stream on there as well. Let's keep looking at more stocks here. Yeah, dude, it sucks that I keep getting banned. So here's SUNE, Sun Nation. So I'm not even going to give too much time on this stock. They're only a $13 million company. $13 million company, and they lost $6 million just in the most recent quarter. Oh my goodness. And they have more liabilities than assets. Please stay away from that one. What up, AFG? Yeah. Opinions on MELI. So this is Mercado Libra, or I'm probably pronouncing that wrong. They're a $106 billion company. Wow, they're huge. That's so impressive. What business are they in? So commerce revenue, not e-commerce, but financial services, credit revenues. So, oh, they're a fintech, so they sell fintech products as well. That's pretty cool. And look at the net income. Wow, they made 640 million of net income just in the most recent quarter. So that's incredible bottom line and top line growth. Sales are up 37, net income's up 200. Wow, they grew their net margin. Wow, that's incredible. They 3x their net margin from last year. So I just scooped up 30 shares of Google and 200 of ALAB last week. Yo, what up, JS? ALAB. What's this one? Oh, this is Astera Labs. Yo, Jello, what's up? We are back. I hope we can stay back. So here's Astera Labs right here. So check this out right here. They sell products. How are their product sales doing? So actually, let me go down here to the revenue. So wow, look at the sales. The sales were a new record, 171 million of sales, and they made net income. That's crazy. So they made some net income, and the sales are just growing like crazy, and they have no debt. You know, ALAB. I'll add this one to my watch list right here. I can see why you bought them. That's some incredible growth. Yo, Thirst says block stock. Yo, I think that's a Kathy Wood stock. Yeah. Happy Easter, by the way, Jello. Or happy Easter, everyone. So look at XYZ right here. This is Block right here. This is the company that owns Cash App and Block, if you've heard of them before. Unfortunately, the stock has not done too good. They're kind of the same price as they were when they IPO'd. But yeah, if you've heard of Cash App before, 67% of their business comes from Cash App, then Square. And I like that. Actually, this one's pretty decent right now. The stock has done terrible, but the fundamentals are pretty good. They're making 300 million of net income a quarter. The free cash flow, it's a little choppy, but if you average out the 4 quarters, yeah, they're making 300 million of free cash flow a quarter. They're a profitable company. I do like them. So not bad. I do like them. Yo, Notfate said Target. So TGT Target. So yeah, this is they're not doing as good as the grocery stores right now because people obviously still got to get their groceries in a recession, but they sell a lot of other stuff like furniture, apparel, household essentials, beauty products, yeah, and apparel and accessories. So they're a diverse company. But here's why the stock is kind of falling. The sales are down 3% year over year. So the sales are down 3%. The net income was down 20%. So they actually lost some of their margin. But the good news is they still have a safe qualified dividend. You get a near 5% qualified dividend with Target. So yeah, not honestly, They're not bad. I do like them. I own Sprouts Farmers Market. Like, look at all these other grocery stores, like Sprouts Farmers Market's at an all-time high, or just Walmart. We've all heard of Walmart. This is Who knew Walmart? It moves like Nvidia. I should have owned Walmart stock a long time ago, but they're doing incredible. They even have a 1% yield at an all-time high. People are boycotting Target. You're right, Neil. You're right. Yo, Crystal, what app? Yeah, this is if you want to get this app, it's in the link tree in bio. It's the very first link there. Do you like wait, straight to the point, but should I buy Walmart options on Monday when the market opens? Yo, that I this is not financial advice. I definitely don't know. Again, you could lose a lot of money on a stock. This isn't financial advice. Always do your own research. Like, look at this stock right here. We lost a lot of money on this one. So yeah. Yo, Sean, I would stay away from Intel, my friend. You know, I'll be quick about this one because you've been here for a long time. I appreciate you being here. So Intel stock, unfortunately, is at the 2014 low. So if you bought Intel in 2014, unfortunately, you're down on your position. But here's what is unfortunate about Intel, and I'd way rather own a Taiwan Semi or an MU Technology. Look at this on Intel. They used to make 20 billion of net income a quarter. Every Apple iPhone used to have an Intel chip in them. Now every Apple iPhone has a Broadcom chip inside of them. They dropped Intel. So sad. Look at this net income losses. I mean, this is ridiculous. And same with the free cash flow. They're just burning free cash flow every quarter. Literally 3 to 4 billion of free cash flow a quarter. So anyway, I'd stay away from Intel. I'd much rather buy a TSM or an MU or an Nvidia even. I love Nvidia. Again, not financial advice here. Eli Lilly. So yeah, this is a great growth company. Yeah, not fade. This is unfortunate for NVO. Eli Lilly, this company, you've probably heard of Ozempic before. They just made an Ozempic copy, but in a pill version. You know, Ozempic, you got to take a shot in your behind, but Eli Lilly, they now made a pill version, and that's why the stock was up 14%. If you're wondering, like, whoa, why'd they gap up right here? They had successful results on their weight loss pill, which was pretty impressive. Again, the healthcare stocks are kind of being beat up by RFK, but look, they sell all these different prescriptions like Zepbound. Look at Zepbound. This is so impressive. This is their weight loss prescription. The revenue on Zepbound went from 175 to 1.9 billion in a year. I mean, that's incredible. Mounjaro, if we look at this one, it's up 60% to a new record. So anyway, they're just incredible growth company. And unfortunately, if we look at NVO right here, this is their biggest competitor. It's NVO. This is Novo Nordisk. They actually own Ozempic. This stock owns Ozempic, but unfortunately, and I didn't know this, the patent for Ozempic expires in 2027. So I think that's might be why they're kind of selling off because the fundamentals are great. That's what's weird. The stock is selling off, but the fundamentals are at an all-time high. It's up 21%. So it's incredible net income growth. What platform is this? Yeah, if you want to get this platform, it's in the link tree in bio, first link there. It's actually a brokerage, so it's free if you want to get it. It's in the link tree in bio. Anyway, you have UNH. It's called Mumu. United Health Group. I actually do not own any United Health Group, but I think this one is at a really good opportunity to pick up some shares. Now, unfortunately, they triple missed on the business. They missed on revenue. They missed on net income. They missed on EBITDA, and they missed on guidance. So it was like really a quadruple miss. But you know, I still like them. We use Optum RX. I mean, look at this Optum RX revenue. It's ridiculous, up 15% year over year. So honestly, I think this one's in buy the dip territory. So they're all right. They're a huge Dow stock. They have a nice dividend growth as well. So yeah. Novo Nordisk is also making a pill version. Oh, John, hopefully, hey, thanks for that. Actually, I didn't know that. What's your investing strategy? Long-term goal? Yeah, I just like to buy and hold high-quality stocks. Here, I'll show you my Robinhood. This is my main dividend portfolio. I'll be super quick about this. I just like to buy and hold high-quality stocks like Google, Meta, Amazon, Salesforce, McDonald's. Yeah, I love all these companies right here. Yeah, here's some of the stocks going in here. Like I got Amazon, DocuSign. Let's see. So yeah, let's look at some more stocks. Yeah, if you guys got any stocks you want to look at, let me know. Yo, we're streaming on YouTube and TikTok right now. I am reading both chats. So, yo, David said thoughts on Dave. And oh, here's Reddit, by the way. I do own some Reddit. This company I own in my Webull account. So check this out. This is such an interesting company. I own 7 shares of this stock now. So I do own 7 shares of this company. And right now, the stock price is $84. So the stock price is $84. Look at the free cash flow per share growth. I've never seen another company so impressive. I mean, it's $3.20. So they're trading at a 6% free cash flow yield, and they made 3. Not This is super not financial advice. Super not financial advice here, but at minimum, according to my calculations, you should at minimum just get 8% of your money back a year. Like, is if the business just stays where it is. So that one again, not financial advice there. That sounded really bullish, but I don't. You don't want to put a lot of money into that company. Don't put a lot of money into it. But I do really like them. Let's see. Do BCE. What is BCE? Let's check it out. So, not heard of this company. Dang, the stock's at an all-time low. This is a Canadian company. Um, yeah, something went wrong here. They're in a communications business, so not really a growing industry. Yeah, look at that. The sales are down 9% year over year, so they lost their growth. Sales are down 9%. They are still making net income, but dang, the net income was down 5. So nothing's really blowing me away here. Wow, a 12% dividend yield. The payout ratio says it's really high because of that one-time loss here, but they're not terrible. They're not terrible, honestly. They had that huge one-time adjustment. I'm not sure why. RCI is near its recession 2008 low. Oh, what up, Gabe? RCI stock? What's this one? Rogers Communications. Yo, if you look at SiriusXM as well, yeah, dang, look at that. RCI stock is at lower than it was in 2017. Dang. Let me check out their fundamentals. Yeah, they're the sales are actually, this one looks better. Sales are up 2%, the net income's up 70. Yeah, actually RCI is looking a lot better than the other one we looked at. Um DLT wait, DLTR. The CFO just bought a bunch last Wednesday at $72. Well, hey, the CFO got a good deal because Dollar Tree is at 79 right now. So yeah, this is Dollar Tree. Um, they don't pay a dividend, unfortunately. I like Dollar General probably more because they pay a dividend. But let's check out the net income. Yeah, this is a brand. So their Dollar Tree business is doing good. I think they own Family Dollar. Let me double check that. I don't. Maybe not. I don't know. They do. So they own Family Dollar. That's 40% of their business. I heard Family Dollar is kind of like not doing so good. But yeah, the numbers are dang no way. They just lost 3.7 billion. So yeah, the fundamentals really did just decline. Yeah, how do you in revenue lose 5 billion? I'd be careful with Dollar Tree. I'd probably rather buy a ticker symbol DG. HE Hawaiian Electric. Sorry, that probably wasn't too helpful. I do apologize there. But here's Hawaiian Electric. Does anyone remember those Hawaii wildfires? This was back in 2023. It was huge news, like the Maui blast, conspiracies and stuff. Well, anyway, this company got blamed. This company got blamed for all the wildfires in Hawaii and had to pay $2 billion in fees. And guess what? The whole company is worth 1.8 billion. So they paid more in fees than the whole company's worth. So, and they sold off their bank assets. I'd be careful with Hawaii Electric. All the bad is priced in. It should do pretty okay now, but yeah, I'm staying away from that one. CLS, what's this one right here? Celestica. So for a $9.75 billion company, another Canadian one. So this is a Canadian company. Connectivity and cloud solutions. Yeah, let's see how that's doing. So that's up 42% year over year. Yeah, the cloud business is doing great. Advanced technology, that's down 5, but that's all right. So what about net income? Yeah, wow, the net income was up 60%. Is that real? That was real. So they just grew their net margin by an obscene amount. Wow, yeah, this net margin's up 35%. That's really impressive. I see why this stock's done so good. Check MDLZ. Yo, this company, this is Mondelez. They own so many cool brands. If anyone heard of Sour Patch Kids, has anyone heard of Toblerone chocolate? Cadbury egg. They own so many brands. So yeah, that's this stock right here. Yeah, biscuits and baked snacks. They sell chocolate, gum and candy, cheese, even beverages. So yeah, very diversified company. I love that. And they're making a lot of net income a quarter. Like usually, if you average out the 4 quarters, they're making over $1 billion of net income a quarter. So they are being a little bit affected by the commodity of chocolate right now. The price of chocolate has gone up like crazy, but it's just a headwind. It shouldn't affect them long term. They're pretty cool. Sour Patch Kids stock. Check out what up. Gia said BOW. So what's this one? This is Bowhead Specialties. Yeah, this is an insurance company, I believe. Wow, look at that. The stock is at a near all-time high right now. So they haven't been public for that long. They just IPO'd this year. But yeah, look at that. Sales are up 44. Net income is up to 13 million. They're a profitable company now. So I actually really like BOW. They're profitable. They're just an insurance company, so yeah, not too bad. They IPO'd not too long ago. Check out UPS. Yo, not fades, dude. UPS, this is a great dividend play. So unfortunately the stock price has not done good though. If you like look at the stock price, they have kind of gone nowhere on the weekly. But if you look right here, the dividend, you get a 6.7% dividend right here. So you get a really nice dividend right here. So yeah. But the growth of the company is kind of gone. Like if we go to this right here, where's this? The net income right now it's 1 to 1.5 billion a quarter. If we go back to 2022, it was always 2 to 3 billion a quarter. So unfortunately, they've kind of just lost their growth right here. So yeah. Anyway, let's keep going. BITO, it's the BTC ETF. Yo, here's the thing about BITO. I think this one has a really high dividend yield. So check this out. It has a 75% dividend yield. So I'm pretty sure they do options to mimic the price of Bitcoin. And because of the options, you get a 75% yield. I don't really know. I need to do some more research on this one, but apparently it's done pretty decent. What app is this? So hey, this is a brokerage right here. Yeah, if you want to get it, it's in the link tree in bio. First link there. Um, yeah, I love all the analysis you can do. Like you can track all the super investors' portfolio and stuff. Like check this out. Like we can see Nancy Pelosi's portfolio, Warren Buffett. So yeah, it's kind of cool. Anyway, look at BBAI. Yeah, let's check it out. BBAI. So this is Big Bear AI. Now this is a mixed bag. There's some good news, but there's also some really bad news. If you look in the top right, this whole company, remember this number. The whole company is worth 730 million, and in the most recent quarter they lost 150 million. So unfortunately, that's why they had this huge gap down on earnings. They kind of triple missed. They missed on, yeah, look at that. They missed on revenue and they missed on net income. So I'd be careful with BBAI. It's kind of like a swing trade. Yeah, I wouldn't put a lot of your portfolio in them. They could still do great, but I just wouldn't put a lot of my portfolio in them. Oh, here's a Target. Yeah, what up, Deli? What's up, dude? So Target, yeah, I saw Target a few times. I'll be really quick about this one. This is what I like. The good news is they have a 5% qualified dividend. They can easily afford the dividend right now, 5% yield. And look at the PE ratio. The PE is at 10. They're trading at 10 times net income. But unfortunately, bad news. They lost their growth. Sales are down 3%, and the net income is down 20%. So that means they're losing their net margins. So I still like Target though. Of course, I like them. But I actually I kind of own Target's competitor. Actually, if I go down here, again, not much of them, but I actually own 5 shares of Kroger. They're like a grocery store. Dude, Kroger, we just saw Target. They're not at an all-time high. Kroger is at an all-time high right now, which is pretty cool. So if Google sells Chrome, will stockholders get shares of both? Yeah, they will. And what's really interesting is I read an article that if Google Chrome sells, or if Google has to sell Google Chrome, the two stocks separately will trade at higher valuations. So you might actually make money in the spinoff. Again, I'm down bad on Google. We're down 7.3%, but I think that's a great just buy and hold for the long run kind of company. It's just such a safe dividend growth company, I think. And the fact that they now pay a dividend means they're going to be more financially disciplined. So I just really like it. Any big news on crypto this week? Yo, I'll be super quick about this. Yeah, look at right now, the overnight market, we're down 0.23%, but look at crypto right here. I don't own any crypto, by the way. Wow, look at Bitcoin, new intraday high. It's really just rallied up the past couple hours here. So Bitcoin's doing great. It's unique. The cool thing about Bitcoin is there's no earnings reports you have to worry about. Bitcoin won't miss on their margins. They can't, get affected by tariffs, I don't think. So anyway, good. Crypto's so unique. I don't own any crypto, by the way. CPX. What up, King? You said CPX. Is that Capital Power Corp? I don't know if that's the one you're talking about because that's a Canadian company. $6.7 billion. Let me know if that's the one you're talking about. I'll check it out. Yo, MAIA Maya said, please do IREN. Let's check it out. IREN. So Iron, so this is a super small company, a $1 billion company. The stock has done nothing for multiple years. So I'm assuming the fundamentals aren't good. So let's verify that. Well, actually, whoa, I'm actually mistaken here. Wow, the assets are growing. The revenue is up 170% year over year. They made net income. Yo, why is the stock falling? Ooh, the cash from operations was negative 130 million. No, that's like that was for the full year. No. I they're on my watch list. Oh, this stock is on my watch list. I'm gonna come back to this company. It's honestly impressing me, but I don't know why the stock has done so bad. See, sometimes stocks are just weird like that. They have great fundamentals, but maybe they're doing weird stock-based comp. Maybe they're diluted you 50%, like Fubo TV. Yeah, that's why Fubo. If anyone heard of Fubo TV, the stock price, if you ignore the most recent rally here from Disney, the stock price has done terrible since IPO. Yet the fundamentals are incredible. That's because they're doing stupid amount of stock-based comp. They've diluted you 95%. If you bought $100 of Fubo TV on IPO day, you would only own $5 of the company. Or oh, I'm wording that weird. And in percentage wise, if you own 1% of Fubo TV when they IPO'd, you now only own 0.5% because of their dilute. I'm wording that weird. Anyway, let's let's keep looking at some more stocks here. SCHD, yo, this is a dividend growth ETF. So check this out. You get a 4.1% dividends. You get 1% of your money back every quarter with this ETF, and they own a lot of the high yielding popular dividend stocks like a Coca-Cola, Verizon, Altria, Pepsi. These are Chevron, Coca-Cola. Those are classic Warren Buffett stocks, and Kraft Heinz as well. What up? Austin said Kraft Heinz. These are all Warren Buffett stocks. Here's Warren Buffett's portfolio. He has 11% in Coca-Cola, 6% in Chevron. And did you know Warren Buffett owns Kraft Heinz? This is a weird stock for him to own, but they own Lunchables, Kraft mac and cheese, ketchup. You've probably heard of all of Heinz stuff, but fortunately Heinz, their business has been a little choppy recently. They usually just make 1 billion of net income a quarter, but the sales are down 5%. They've kind of lost their growth. Oh my gosh. There we go. Sorry, YouTube. All right, yo, what's up? We're back. Hey, we're streaming on both YouTube and TikTok right now. If y'all want to support me, head over to the YouTube stream. I'd appreciate that. This TikTok account I'm on right now has been permanently banned 5 or 8 times. So I'm scared it's gonna get banned again, or it's gonna get permanently banned this time. I don't know. So, and by the way, I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. So here's General Mills. I believe, yeah, dude, I own this stock for like a small, brief amount of time. But anyway, here's General Mills. Here's what I liked about them. Look at how diversified that General Mills is. They're in snacks. They own cereal, like they own Frosted Flakes, Cinnamon Toast Crunch. They own, if anyone's heard of that. Of course, you've heard of Cinnamon Toast Crunch. Then they also are in pets. The pet industry. They sell dough. They make those biscuits that are delicious. We have some of they own Pillsbury dough. And look at that. They just make 500 to 600 million of net income a quarter. GIS is, I like them. They just sell commodities. Look, you get a 4% dividend yield, and it's in my opinion, really safe. Yo, Crystal, I'm so sorry, Crystal. Thanks so much for the dino there. I really appreciate you, Crystal. Thanks so much for the gift there. I appreciate that. If you got a stock you're going to look at, let me know. I got you. Um, Pepsi might be a good buy. Yeah, Pepsi, yo. Pepsi, what's their dividend yield? So we've all heard of Pepsi. You've probably heard of Flamin' Hot Cheetos, Frito-Lay, Fritos, Lay's. They own all those. They own Pepsi. They own a lot of popular brands, but 3.7% dividend yield. Very sustainable. Yo, Trapper oh 08. Yo, Trapper 008. Thanks so much for the gifts, man, for the roses. Thank you so much, dude. And look at the PE. The PE is a 20. That's a very low valuation for Pepsi. So that's what I like about them. Yeah. Beverages, then they're in Frito-Lay. So pretty cool. Let's see here. Is there an app that this? Yeah, hey, this is a brokerage right here. If you want to get this brokerage, go to the link tree in my bio. It's the very first link there. Yeah, I love all the analysis you can do. Like, here's Hawaii Electric. Yo, someone's been saying Hawaii Electric. We just looked at them, so I'll be quick. This company got blamed for all the Hawaii wildfires, so they had to pay a $2 billion fee. You know what? I'll just show you the revenue here. But look at that, $1.3 billion. There was another one. But anyway, this company, they're losing money every quarter right now. That's actually really unfortunate. These are all like, I just be careful with that one. Yeah. Let's see. That probably wasn't too helpful. I do apologize. Yo, Trevor said USFD. What is that one? USFD. Yeah, thanks again for the roses, dude. So US Food Holding. That's a basic name, but hey, the stock's done pretty good. So $14 billion company. Let's see. They're in meats and seafood, dry grocery, refrigerated. They're in dairy. So hey, I like how diversified that they are. And look, they're making net income every quarter. Now, the net income did fall. Oh, well, it was a one-time adjustment, so not too bad. Yo, King JP. Hey, I really appreciate you're still here, King JP. I really appreciate you. Happy Easter, guys. Thank you so much, King JP. And yo, Odyssey. Thanks for the 5 roses, for the 20 roses, King, and the 5 roses from Odyssey. Y'all are the best. I really appreciate y'all. Have a great Sunday. Um, if you got a stock you want me to look at, JP, King JP, or Odyssey, I got you. Let me know. Someone asked, is Pokemon publicly traded? So Pokemon is not publicly traded except through Nintendo. So Nintendo owns 10% of Pokemon. So this is the only way to get exposure to Pokemon. So it's actually through Nintendo. Has anyone heard of the Switch 2? The Switch 2 just came out at some ridiculous prices. That should just print money for them. So hey, I wanted to look at TSM. This is Taiwan Semi, one of my favorite. Not again, not financial advice when I say this, but this is in my top 5 best stocks to buy right now. Not financial advice. Look at, if you don't have any exposure to chips or the chip industry, check this out. You get a 1.58% dividend yield, only a 34% payout ratio. They make those 5 nanometer wafer chips. They go in everything. Like they're in the window in your car. Like look at their wafer chip market share. It went from 61% to 67%. And they're in like little parts in your washing machine. They're little chips. It's crazy. And look at this right here. The best part is the bottom line they're bringing. They made 10 billion in the most recent quarter, 11 billion the quarter before, then another 10 billion. So TSM, great, just buy and hold forever company. No real reason to ever sell out of them. Can you go through your no debt companies? Oh yeah, what's up, Eric? I got you. Yeah, so this right here is my debt-free watch list. Every stock in here has no debt. You've probably heard of some of these before, like Pinterest, Yelp, Celsius, Zoom, DocuSign. Has anyone heard of the Opera GX browser? I swear I keep getting so many ads for that browser, but they're a stock. OPRA, Reddit. Actually, Sprouts Farmers Market has some debt. I will remove them. But every other stock in here, like Duolingo, Monday.com, Powell Industries, all debt-free companies. So yeah. So let's keep going here. Are you bullish or bearish this week? I'm neutral. You know, there's earnings this week. We get earnings from Google and Tesla, so that should move the market. So later this week we get earnings from Google. I think they're gonna crush it. I think they're gonna do good. But really, the earnings won't matter. It's really the earnings call and the guidance they're gonna give. They're gonna talk about tariffs and I'll just listen through it, but or I'll just listen to the summary. Ooh, yo, so Odyssey, what's up, man? He said thoughts on RCL. So this is, I normally don't like cruise lines. But look at Royal Caribbean right here. This cruise line is so impressive to me. Check this out. You get a 0.5% dividend and the payout ratio is only a 9%. So they have so much room to raise their dividend. And here's what's so impressive. They're making net income every quarter. They're making, wow, 700 million of net income a quarter at minimum. I don't believe it. How does this cruise line make so much money? I don't get it, but as long as they can keep up these fundamentals, that's incredible. You know, cruise lines have very good deals for a vacation, like a value, like like compared to like going to Disney World, like cruise lines are good value. I like them. Yo, um, oh yeah, hey, thanks again for the King JP for the 20 roses. He said, can we look at CPX? Right, is this wait CPX, and then we'll look at we can look at Tempest AI and TSM. Wait CPX. I think you're talking about Capital Power Corp. Let me know if this is the stock you're talking about here. Capital Power Corp. I'm not sure if this is the one, but I'll do. Oh, it is the one. Okay, great. Let's do some analysis on this company. So they're trading at 9 times net income. So yeah, they do electrical generation, which is cool. So what about the revenue? So the revenue's down 12, but the net income is up. It was a one-time adjustment. So actually, that's not great. So revenue was down 12. The net income was down 66%. Yikes. You know, to be honest with you, nothing's really blowing me away here to really want to buy this stock. I mean, they're a $6 billion company. They've done really good since 2019. Actually, wow. Um, I just want to see the growth come back. Hmm. You know, there's probably some info I'm missing there, but I do like them. Yo, what up? We can look at Grab Holdings as well. Yeah, Grab. This is company owned by Uber. Yeah, that probably wasn't too helpful there. I apologize on CPX. If you got another stock you want me to look at, let me know. Um, Thank you. I appreciate it. Hey, well, yes, sir, Eric. I appreciate you being here. Yeah, we can look at, wait, oh, that's the metals company. I'd stay away from TMC, but we can look at them too. But here's Grab Holdings. This is Uber's competitor. This is ticker symbol Grab. They do everything Uber does, but in all these other countries. Notice you don't see the US or Canada or UK over here. So this is Uber for all these other countries. And Uber is now the largest shareholder. So if you own any Uber, you technically own some Grab. And that's what's so genius. It is genius for Uber to be the largest shareholder of Grab. Oh, Toyota Motors owns 6% of the company. So, hey, they're a niche company. I do like them. They make a lot of free cash flow. So let's look at. Oh yeah, so this is a risky startup right here. So this is the metals company. I've looked at their investor presentation. They make this company right here makes robots that sucks the gold, nickel, and cobalt out of the ocean. It sucks it out of the water. But unfortunately, they haven't had any like this company still has no revenue. Their revenue list, they've never sold anything. They've never sold a product or a service, and they're losing a little bit of money, like 10, 20 million a quarter. So that's the stock has rallied up recently. Was there some good news? Let me know, David. Did like maybe there was a successful trial? I don't know. I looked into the news recently. I couldn't find anything, but yeah. Oh, yo, Hedoni or Heyo Deny said SoFi stock. What's up, dude? I love SoFi. This is a fintech right here. I do own quite a bit of SoFi. Or I don't own that much SoFi. I own 25 shares. But here's what's so impressive. Look at their financial services business. This is so impressive. The business is up 85% year over year, literally two new records. So that is some impressive growth and bottom line growth. Mm. Look at this. So they're making net income every single quarter right now. If we zoom out to last year, like no one used to really take SoFi serious. They were losing like 100 million a quarter. So now they're making net income every quarter. So from a financial point of view, SoFi's one. The valuation is still a little high right now, so you can't put a lot of your portfolio in that stock. But I think they're a pretty fair hold. Yo, someone said Tempest AI. Yo said Tempest AI. That's Nancy Pelosi's husband bought a huge stake into Tempest AI right here. So I'll show you the fundamentals here. They're in a niche business. They're in the genomics industry. And check this out. The genomics revenue is up 31% year over year, literally to a new record. So genomics is at a new record. The data and services business is up 30, or it's up 44%. That's even better, up 44%. And look at these net income losses. Now, I used to avoid this company because of the huge net income losses, but in the most recent quarter, they only lost 13 million. They barely lost any money. So they're kind of growing out of the losses with their growth. Yo, Gag said RIVN. So Rivian, yeah. I saw so many Rivian trucks today for some weird reason. So here's Rivian right here. Unfortunately, I do own them through Amazon. So if we go to the largest shareholder down here, Amazon owns 14% of Rivian, and I do own some Amazon. But here's why I'd be careful with Rivian, just because they're burning a lot of money right now. They're losing like $1 billion of net income a quarter, and the losses are lost. Wait, the losses are shrinking. Like they're only losing. They only lost 750 million, so they need to keep that trend up. They just need to lose less and less money. It's because China stopped selling rare metals to the U.S. Oh, hey, that's what's up. Oh yeah, we can look at Apple as well. If we go to Nancy Pelosi's portfolio or Warren Buffett's portfolio, both of their largest holdings are in Apple. And here's what I like about Apple right here. They have a nice dividend growth. 0.5% yield, low payout ratio. Most of the revenue comes from the iPhone and services and the wearables like the AirPods and the Mac. They have a huge smartphone market share, 23%. What software are you using? Yeah, if you want to get the software right here, it's called Mumu. It's in the link tree in my bio. It's the very first link there if you want to get it. It's free. But look at the net income. They're printing money, 36 billion just in the most recent quarter. So impressive. And like the services business, whenever you go buy something in the App Store, if you spend $10 in the App Store, Apple just takes a 30% high margin fee. So they take a $3 fee just because you're on the Apple ecosystem. So they're a huge like royalty, like hardware, software play, which is really cool. Yeah, what up, Lucky? Said, can you check out Colgate Palm? That ticker symbol CL. Yeah, so this is a staple right here. Even if we go into a recession, people still gotta buy toothpaste, and like hygiene products. Let's see. Yeah, so oral and personal care products. It's not up crazy. Like it's actually down year over year. It's down 0.8%, but this does, pretty good in a recession. It's like a flight of safety stock. Look at this. You get a 2% yield here. They even have a lot of room to raise their dividends. You get a 2% dividend with ticker symbol CL. And if we look at the bottom line here, where's the net income? Yeah, they're making 700 to 800 million of net income a quarter. What about market? Oh, they're all over the world actually. They're very internationally diverse. North America is only 2% of their business. Wow. Anyway, they're cool. Let's see. What about Julian said ARCH? What's this one? ARCH. Are you talking about Arch Biopartners? This is a Canadian company. I hope you're not talking about this one. They're only worth 100 million, so very small company. They're Canadian company worth $100 million. Did they sell anything? This is so risky, man. I mean, look at this. The sales were 82,000 in the most recent quarter. So I would just please avoid that one. That looks so risky. Hey, they could still do good, but it just seems real risky. Yo, I've never seen someone ask for this stock since I've been streaming for over a year. Warner Bros. Discovery. Yo, let's look at this stock right here. I haven't looked at them since their like AT&T spinoff. So AT&T spun off Warner Bros. Discoveries, and Warner Bros. Took on a lot of AT&T's debt. But yeah, they own like Cartoon Network. They own a lot of cool stuff. You know, the Minecraft movie that just came out was a Warner Bros. Discovery. The Gladiator movie, I think, was too, or I don't know. Anyway, the sales, yeah, dang, the sales are down 2.5. Did they make net income? They did. They made 640 million of net income. Not bad. So, they're just an all right company. They're all right. Yo, users said Elf Beauty. So, unfortunately, the beauty stocks are doing terrible. If you look at Estee Lauder, Elf Beauty, they're all doing terrible right now, and it's really unfortunate. So, check this out. Elf Beauty, if we go to them right here, they lost their margins. So look at this. The revenue is doing great. The revenue's up 31%. But then when you go to the net income is down 35% year over year. So that means they're losing their net margins. Yeah, look at that. The net margins are down 51%. So yeah. Is it easy withdrawal? Yeah, King JP. Yeah. I don't want to reveal anything I'm probably not supposed to, but it's super easy. You just, yeah. Um, Let's see. POOL. Yo, Warren Buffett now owns some Pool Corp. This company has a monopoly on like the pool parts industry. It's crazy. So if we look at this right here, the PE ratio is a 27. So they're trading at a pretty fair valuation, 27 times net income. What about free cash flow right here? Free ca- th- they kind of lost their growth right now. That's why the stock isn't doing too good. We had a bit of a colder winter than expected. This stock wants hot summers. So, but yeah, the sales are down year over year. The net income fell even more. So their margins just collapsed. Yeah, the net margin fell 26%. That's really bad. Um, hmm. But I do know Warren Buffett owns a little bit of that, but I wouldn't buy it just because Warren Buffett. How much up right now? Oh, well, hey, yo, what up, Chach? Yeah, so if we go to my Robinhood portfolio right here, yeah, we're actually down right now. We're down in the overnight market. Yeah, stocks are open right now. Look at us year to date. Again, not financial advice, nothing in this is we're down 10% year to date. I'm not an expert. I'm trying to say there. Um, so let's see. Oh, ACHR. Dude, ACHR. This is another one. Sadly, I'd avoid this one as well. And the stock has done pretty good. They just got a contract recently. But if we go to the business right now, this company has never ever sold a product or a service. They've never made a single dollar of revenue. And look at this. This is also bad news. They lose over 100 million of net income a quarter. They lost 200 million in the most recent quarter. So in my opinion, call me crazy, but company doesn't sell anything, loses 100 million a quarter. I'd stay away from that one. That's why I just like looking at the fundamentals there. I just have a tough time really trusting my money with that kind of stock. It seems like a lot of speculation. So you know what up? Say what said NLY stock. What's up, dude? So this is a BDC right here. This is a business development company. They actually have to, by law, pay out most of their income in the form of a dividend. So this 14% dividend yield might be sustainable. And because they're a BDC, this is an unqualified dividend. So you pay a really high tax whenever you receive this dividend because they are uniquely they're so unique. I would rather buy a basket. So I'd rather buy BIZD. BIZD is an ETF that owns all the BDCs, which are the companies that have to pay out most of their income in the form of dividends by law. NLY might be in their top holdings. I don't know. Like they own Ares Capital. This is the best. Honestly, if you're looking for a super high yielding dividend stock that's sustainable, again, not financial advice here. This company has a 9.4% dividend yield and it's sustainable. And also look at the stock price appreciation. It had some decent stock price appreciation. So You really buy that to maximize your dividend income. You won't really outperform the market with that kind of stock. So, yo, Bill said UPS stock. Yo, Bill, to be honest with you, UPS isn't really blowing me away. The good news is with UPS is the huge dividend. You get a 7% qualified dividend. So, yeah, this company pays a qualified dividend, but the payout ratio is getting a little high. Um, yeah, I mean, look at this. Look in 2022, they were making easy 2 to 3 billion of net income a quarter. Every quarter, it was over 2.5 billion. But look, if we look in the most recent quarter, it's always under 2 billion. They've kind of lost their growth. Hi man, what's the app? Yo, Antonio, this is a brokerage right here. If you want to get this software, go to the link tree in my bio. It's the very first link there. It's called Mumu. Yeah, it's a brokerage. Yeah, there's a lot of cool features. Like you can track like Kathy Wood, Nancy Pelosi's portfolio and stuff. A lot of cool features. And I just love all the analysis you can do. Like, let's go look at UNH right here. Let's go. Yo, what up? He said United Health Group. So we use United Health Group, by the way. We use OptumRx. Yeah, here's what's cool about this app. You can see where the revenue comes from. Like, look at the OptumRx business. This is some incredible growth on the annual basis. I mean, it's at a new record. But the reason the stock fell, if we look at them on the 5 day, they just gapped down. They triple missed on earnings. They missed on revenue, they missed on net income, they missed on EBITDA, and they missed on guidance. It was very unfortunate. So, but I think this one's honestly in a pretty good buy the dip opportunity. Look at that. You get a 1.85% dividend yield. So, yeah. What's your profile name so we can check it out? I don't. Are you talking about this right here? Here's my Mumu account. It's called Nathan Robert. Yeah. Hey, by the way, if y'all want to support me, this TikTok account that I'm on right now has been permanently banned over 8 times. So if you want to support me, I'm also streaming on YouTube right now. Please subscribe to my YouTube channel. But I don't sell anything. I'm not a course, book, WhatsApp, Telegram, Discord. All I ask is that you'd hit the subscribe button to my YouTube channel. Maybe watch a video on there. Yeah. Um, here's a really risky company. And I like just looking at the fundamentals of companies. That's what I like to do. Again, none of this is financial advice. I'm not an expert. You could lose a lot of money. Like, look at this stock right here. They're at an all-time low. What is that? Hey, Ryan, this is a brokerage. If you want to get this app, it's in the link tree in my bio. It's the very first link there if you want to get it. But here's Plug Power. Here's why I would please stay away from this company right here. Look in the top right. The whole company is worth $860 million. The market cap is $860 million. That means that's how much the whole company's worth. And you won't believe this. In the most recent quarter, they lost 1.4 billion of net income. So think about that. Here's why no one wants to buy the stock. Let's say you buy the whole company, Plug Power. You spend 700 million buying the whole entire company. Well, you just bought an asset that lost 1.3 billion of net income in the most recent quarter. 200 million the quarter before. So you're losing like 30% of your money every quarter with this stock. I'd please stay away from them. I'm not trying to bag on anyone's stock here. I just try and show you the numbers for yourself. You can draw your own conclusion. I've been burned on those kind of stocks too many times. Like look at like this Perion Network down here. I thought that one was a good stock, but what you usually find with these stocks that are at all-time lows is that the fundamentals are terrible. Like look at this stock right here. They lost their growth. Sales are down 44%. The net income, they used to make net income every quarter. Now it sometimes went negative. So companies with bad fundamentals is usually why the stock price tanks. Jim said H Max. That's a high yielding dividend stocks. You basically buy this ETF. Oh, look at this right here. H Max. It looks like they own all Canadian companies, a lot of Canadian banks. So what's the dividend yield? It's not telling me, but I'm sure it has a nice yield. I don't know if that's sustainable. 15% dividend yield. Oh, yo, Gabe, what's up, Gabe? He said Lululemon. This is a company that has their growth. I would way rather buy Lululemon than Nike right now. Unfortunately for Nike, they lost their growth. But look at Lululemon. They have 767 stores. Not bad. What about the net income? So, yeah, here's the good news about Lululemon. Their net income is up year over year. The net income is up 11%. Now let's go look at Nike. Lululemon and Nike are pretty similar. I actually look at this huge look at this like huge loss I avoided here. And I didn't even mean to do this really. I honestly hope I sold Nike and then the stock would keep going up after. But I sold all my Nike at $79. Well, now it's all the way down to 55. And that's because Nike, again, has just lost their growth. Net income is down 32. This is so sad. Sales are down 9%. Net income is down 32%. So Nike has just lost their margins. Margins are down 25% year over year. If we look at their footwear business, the footwear, like the shoes, are down 12% year over year. So Nike has lost all growth to the point where they can barely afford the dividend. Or next quarter, they won't be able to afford the dividend. So, yo, Adnan said HIMS, please. So, yeah, dude, this is a great growth company. Incredible fundamentals. They have no debt at all. This is a debt free company. And check this out right here. If we look at the sales, like this is why they deserve all the hype. The sales are up 95% year over year, literally to a new record. So, incredible sales growth. And same with the profits. The free cash flows at a record, the net income's at a record, the balance sheet's at a record. Yeah, the cash on hand, 300 million of cash. I mean, incredible for him. So SDIV for dividends. What's SDIV? Is that a Global X Super Dividend ETF? Yikes, dude! This one, yeah, you get the nice dividend with these ETFs. But look, the stock price appreciation has been really bad. You know, you're down a lot of money since 2019, so I'd be careful with that one. Again, you buy it to maximize your dividend income. You don't really buy it to outperform the S&P 500. So, um, yo, Tissing said SFR. I've not heard of that stock. So, are you talking about Sandfire Resources? This is a Canadian company. I hope you're not. I don't know. I don't think that's the one you're talking about there. Um, Curious about SMCI after the Zax upgrade. Hey, um, here's Super Microcomputer. You know, this is a decent stock. I do own them. Actually, I'll show you that real quick. Oh, yeah, here's my SoFi technology position. I own the smallest amount of Super Micro. Like these kind of companies, you can't put a lot of money into them. But I do own 10 shares of Super Micro. I got like $300 of Super Microcomputer. And here's what's cool about them. They're at a low valuation. The sales are up 54%. And look at the net income right here. They're making 300 million of net income a quarter. Unfortunately, they have lost their net margin. So if you go to their net margin right here, here's what you got to be careful of. This is actually really bad news. Net margins are down 30%. So um, they're an all right company. Low valuation. You know, they just sell a commodity, server racks, server cooling. Yeah. Yeah, well, hey, I appreciate y'all being here. I will look at a few more stocks here. Then I'm going to end the stream. I really appreciate y'all being here. If you missed anything and want to replay it, head over to the YouTube channel. You can rewatch it on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And if y'all want to hit the follow button, I go live every day, twice a day, and I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. I don't got none of that. I'm just on here giving my opinion. Yo, Oscar said XTDE for the dividend. I can't find that one. Or maybe it's XDTE. So maybe you're talking about this ETF. Yeah, so this is a covered call ETF right here. They just sell calls on the S&P 500. So you're not going to outperform the market because all this company does is sell calls. So you're not going to outperform the market when you permanently sell calls all the time. But you do get a very nice weekly dividend. You get a weekly dividend with that ETF. Yo, Too Cool said GTLS. He said, I got you. Yo, we'll look at Calm as well. I own some Calm Main. Yo, how'd you know that? I got some of that stock too. But here's Chart Industries. I've not heard of them before, but let's check it out. So repair, service, and leasing. How's that doing? Whoa, that's some crazy growth since 2019. Really impressive. Specialty products, that's up 46%. Heat transfer up 13. Well, so all their businesses are. I'll add them to the watch list. It looks really niche. What about net income? So yeah, they're not making a crazy amount of net income, but they're making like 50 million of net income a quarter, and it's growing as well. So not bad. So let's look at CALM right here. So if I go back to my portfolio right here, where is my Calmain? So yeah, we're down 7.5% on my Calmain stock. But this company right here is the largest egg producer in the US. They have a 35% market share for eggs. So if you've ever bought a chicken egg, high likelihoods that it came from Calmain right here. And here's what I don't believe. The bird flu is doing them a favor right here. They just made a crazy amount of net income. And you get a dividend. You get, if you're looking for high yielding dividend stock, you get an 8.5% dividend in the lowest payout ratio ever. So in the most recent quarter, they made 500 million. That is a really good quarter. So let's just say they make 200 million of net income a quarter. Let's see how much their dividend cost. Dividend cost 73 million. So they could double their, they could double to like a 16% dividend. Anyway, they just sell a commodity. They just sell chickens. They own farms and stuff, but they're an interesting stock. They sell dairy products. But anyway, I really appreciate y'all being here. The main way to support me, if y'all want to support me, please go to my YouTube channel. Go subscribe to it. If you miss anything, you can replay the live stream on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And I'm hoping you'll subscribe to my YouTube channel because this TikTok account that I'm on right now has been permanently banned over 10 times. No, this is not TradingView. Yo, does this look like TradingView? No, hey, this is a brokerage right here. If you want to get it, it's called Mumu. It's in the link tree in my bio. It's the very first link here. Yeah, this is not Trading View. Does it even look like Trading View? It don't look nothing like it. But anyway, hope you guys have a great rest of your day. My name is Nathan Robert. Hope you guys have a great rest of your Sunday. Happy Easter. Yeah, today was Easter. Hope you had a great day. See you guys next week. We'll be live tomorrow to see how the market's doing. I'm pretty sure the market's going to be red, unfortunately, tomorrow. But I expect a pretty flat week. We're waiting for Google and Tesla earnings this week. We get Google and Tesla earnings. So anyway, if you go leave a comment on my YouTube channel, it'd mean the world to me. Have a great rest of your night. See you guys in the next one. Y'all are the best. See you later. Yeah, we're streaming on YouTube and TikTok. All right, thank you all for the YouTube stream. Yo, Winston. Oh, dude, he said D-Wave QBTS. Yo, I've already ended the stream on on TikTok. Yo, I don't even think you're still here, Winston, but you know what? Here's QBTS for you. Are they on the quantum stock? Yeah, here. So QBTS, this is one of the main popular quantum stocks right here. Um, here's why I'm staying away, in my opinion. Just look at this right here. The revenue is only 2 million, so there isn't much to this stock right here. Revenue's 2 million, and they lost 90 million of net income. So that's what I'd be careful with. Nothing's really blowing me away here. But yeah, have a great rest of your night. Happy Sunday.